How's everybody doing tonight? Let me get the Zoom chat up. Alex, how you doing? Jamar, how you guys doing? Let some people get in here. I'm doing pretty good. I'm pretty tired. My girlfriend's sleeping over here too. She's behind me, but she's knocked out. It's only me that's always up. Yeah, if you guys want to post the stream for anybody who wants to watch it on YouTube, they can check it out. I'm going to start recording our Zoom session in a second as well. I'm going to start recording our Zoom session. Don't worry, Zool. I'll answer that question for you, of course, on this stream. Don't worry about that. Do not worry about that. Okay, welcome to a Capital Hungry live trading session. It is currently 1:40 in the morning, Wednesday, October 14th, coming towards pre-London hours. And what we are trying to do is look at market structure, price action, market sentiment, which is pretty much investor behavior that is dictated by the fundamentals, and how we can use this information to map out potential trade ideas. So we're going to be looking at some of our main pairs that we usually trade, such as XAUUSD, GBPJPY, EURUSD, as well as USDCAD, and we'll take a look at Dow Jones as well. So for those of you who are new to the price action sessions or the trading sessions, through these streams or through these live sessions, we usually look for potential scalp and intraday trade ideas. I'm primarily myself going to be looking for intraday trade ideas that I can possibly look for entries and hold for an extended day period, but I will be sharing any potential scalp ideas as well. Before we jump into what the analysis is for tonight, what potential trade ideas we are looking for across these pairs, we want to understand some of the fundamental catalysts at play that brought market fear to the scene. A question that somebody asked in the YouTube chat as well. Okay, so for those of you who do not follow the headlines or the day-to-day fundamentals, you have to understand that you have safe haven currencies and you have risk currencies. When you have market fear develop around the world or in a specific country, right, you have an increased inflow of liquidity or investment by global investors into the safe haven currency, and out of the risk currencies. Your safe haven currencies are the US dollar, the Japanese yen, the Swiss franc, and of course, gold can act as a safe haven precious metal, but when you're just looking at the currencies, those three are your primary safe haven currencies, and the US dollar and XAUUSD has a more prominent inverse correlation now, especially that gold on the higher time frame has entered a stage of exhaustion. But the buyers are heavily exhausted on gold on the higher time frame. It's peaked all-time highs, and I will take a look at that as well. But just understanding that concept through New York session, even though this week started out particularly slow, through New York session we had market fear develop, and the US dollar, for example, inflate through New York session. Japanese yen also inflate through New York session. The fundamental reasoning behind this was multiple things. Okay, one, you had Trump still not confirming anything with US stimulus. This brings a lot of uncertainty to the US economy because the markets are really focused on that stimulus to provide more relief for the American citizens that have been out of work, or and to potentially lessen the impact of any other economic downside if there is another lockdown, right? If the economies do go into another lockdown and it's stagnant, at least the stimulus will help people pay their bills, get food, etc., etc. So Trump has been playing games with this, and it looks like he is not going to confirm something until maybe after elections. At the same time, and let me just go to the Capital Hungry Trade Room to summarize this. So we were talking about it here. So you can see these headlines. These were the headlines on the left side of the screen here that were sent through New York. So we have started adapting to a more fear-sided sentiment. One, you had negativity between the Euro, EU, the Euro Union, and the US on trade talks. Most likely the ruling on Boeing plane taxes or tariffs, but there's still that negativity, those disputes over these tariffs between the EU and the US. Then you also had the Bank of England specifically talking about the negative economic downside risk potentials for GBP. They're talking about the potential to use the negative interest rates, how they need to do more economic stimulus, how downside risks are still very present. Okay. Then you also had negative Brexit headlines between the EU and the UK, how it's very, very difficult to work on a deal. It's still possible, but it's very, very difficult. Okay. And then you also had, of course, Trump teasing about the US stimulus. This combination of events all coming through New York session from a period of about New York Stock Exchange open till about, let's just say, London close and for the rest of the afternoon, really started to change overall investor sentiment to be more on the fear side. This fear side investor behavior and market sentiment for those fundamental reasons led to a boost in the US dollar, a boost in the Japanese yen, and a boost in the Swiss franc, as well as global equities took a bit of a dip from that initial negative news. You could see Dow Jones, UK, and Germany as example when we're looking at the stock markets. Asian markets, Asia Pacific side, we're still holding a bit more solid as most of the negative headlines were impacting either the US or Europe or GBP specifically. But we could see that through that negative volatility and those fear sentiment and that change in investor behavior, we saw smart money and liquidity move through the market as one, meaning we saw that fear drop global equities, specifically USA, UK, and Germany, and we saw it boost the Japanese yen and boost the US dollar. Okay, is that all understood? Because that boost in the US dollar, that boost in the Japanese yen, those negative headlines for GBP from the Bank of England, as well as those negative Brexit headlines, were the fundamental reasons for the one-sided volatility for the GJ sell-off or GBP USD sell-off, because you had that negativity impacting GBP, as well as that boost in inflow in US dollar and Japanese yen. And it was also the reason for pairs like EURUSD to show a bit of a decline and respect bearish structure, as well as that buyer's exhaustion. XAUUSD had a melt because of that same reason, as the US dollar is the secondary in the quote. So when you're trading XAUUSD gold spot, the secondary has had a prominent impact. So when the US dollar is extremely bullish, you have that negative inverse correlation impact on gold, right? So with that being said, now we can see that market fear is looking a bit stronger for now, when we're also observing price action and market structure. So we just want to use this current information, and we're getting some we're getting some Brexit headlines as we speak. EU industry commissioner says no need to find a Brexit deal at any price. We would prefer to have a Brexit deal, but they are ready for a case of no Brexit deal. So there's still a lot of uncertainty around Brexit. There's still a lot of uncertainty around Euro US trade deals, US UK trade deals. There's still a lot of uncertainty around US elections, US stimulus. This uncertainty gets translated into fear, and this is the sentiment we can now play. Okay? So now that we understand why gold fell because of that increase in US dollar strength, as the US dollar, Japanese yen, and Swiss franc are, of course, safe haven currencies, we understand why GBPJPY fell, because you have Brexit pressure pushing it down. You have negative headlines from the Bank of England. You have Japanese yen gaining strength as a safe haven currency, right? And you also have we understand why Euro USD now fell. And a pair like USD CAD would be more on the inverse. It would be going up because you have a risk currency as a secondary, being the Canadian dollar, and you have your safe haven currency as the primary. And we also understand why that gave Dow Jones US30 a bit of that pullback from its highs, right? Because we had that market fear developing, okay? Which we were expecting a pullback on Dow Jones anyways. So now that we understand why, and we understand the current sentiment, let's start observing to see if the price action and market structure makes sense with this. So for example, let's start off with gold here. On gold, you can see from about this order block area, where we had this consolidation phase and some exhaustion by buyers at our higher time frame key level. These key levels, the white lines across these pairs and the red boxes are different. These key levels are mapped using higher time frame candle body conjunction points on the yearly, the 3-month, and the 1-month period on the charts. So these are price points with historical value. That's why they have significance. That's why you see great reactions. And if there's any capital hungry members that are new, you can ask any of the older capital hungry members, or you can let them know in the chat that these levels have been holding out for like the last year. We've been using these same key levels. Even when we got into the 1800s and 1900s on gold, we've already had key levels we were looking to use. But anyways, we see buyers exhaustion and a resistance formed, or an order block, whatever you want to call it. It is buyers exhaustion, because we always want to look at the market and talk about it in buyers versus seller strength, because the market is made up of buyers and sellers, nothing else. It's money moving from one hand to another. So if you can identify and talk about it that way, it simplifies things. Okay, gold now, it peaked new highs by intraday buyers. That was great. It looked like it was going to continue bullish as we had a nice retest of 1912. But as we had market fear pick up, which boosted the value of the US dollar, that's why we're going to keep the US dollar and Japanese yen chart open, because it's going to be significant to watch for some of our trade ideas we're looking to map out. From that point, because we had the boost in the US dollar, there was no validation for gold buyers to continue up or re-enter the market, and we had this massive pullback in these sellers impulsive candles, where we got a retest of 1923 and went straight on the dot, almost $40 an ounce, or 400 pips, down to 1883. Now, the market moves in waves. Again, you have buyers versus sellers. When you have this massive sell-off and you are seeing this reaction here and this pullback, this is not buyers entering the market or telling you, oh, a support is being respected, we're going to go up all the way back to the highs. No, this is sellers closing some of their order flow and buyers working with them hand in hand so they can exit the market. That does not mean we are going to continue all the way up because the support is respected. Okay, now understand this, because the market moves in waves. You have impulsive moves and you have corrective moves. Most of the time, after you have a very strong impulsive move, you have about a 50% correction if the fundamental sentiment is still strong, where in this case, we are looking for market fear. We want the US dollar to continue bullish so we can take more gold sells. But where should we start looking for gold sells? Well, usually we get around a 50% correction. So from this peak point, we saw about a $40 drop. About $20 up would bring us to the key level 1902. I am looking for a pullback in reactions on the lower time frame to around 1902. But if on the 1 minute, which I'm going to zoom in the structure now, if we break and retest above 1897, from a scalping perspective, just to catch that pullback, we can take that 50 pip buy up if we break above 1897, and then watch the reactions for potential sells around 1902 to around 1903 region. Okay, so now that we understand the US dollar is fairly bullish, but from that boost in market fear overall, but it's still reacting to some bearish structure. It's not showing us higher time frame bulls. It just had a very strong bounce, where this bounce had a inverse correlation impact to give the gold sells, the Euro USD sells, and push USD CAD up a bit as well. And then Japanese yen, the same thing. And we understand why as well. It happened. Okay, so now if we get this pullback, one sec, it's going to zoom link. People always want to jump in, you know? So now, if we get this pullback on gold to around 1902, let's just say, and we start getting signs of lower time frame rejection, then there is higher potential that if the US dollar is still bullish and breaks above this bearish structure and makes that secondary move up to 93.84, that there will be higher probability of gold also rejecting 1902, and we can take those sells back down to the lows. Okay, yes, investors do buy gold when there's fear in the market, but gold right now has been heavily overpriced since the coronavirus fear first hit the markets. You have to understand, gold went from about $1,600 an ounce to $2,000 an ounce in the matter of a couple of months, right? So everything does have its market waves, and what I have noticed over the last couple of weeks is that inverse correlation between the US dollar and gold has been more prominent, right? So you have to look at that gold is heavily overextended on the higher time frames, and it's coming into this monthly range here. We're see here, once after we had the 2008 financial collapse, just look at where my mouse is because I don't want to erase the lines. See, once we had the 2008 financial collapse, because market fear was so strong and there's so much global uncertainty, gold extended to all-time highs around 1923. But after that market fear was overall waved off, you had gold come into this consolidation range for an extended period of months, where buyers and sellers were creating this consolidation box, right? And you had order flow being generated in the market for the next potential impulsive move up or down, where this time it happened to be down because you're getting a correction of this overall upside move, because the global economies were starting to rebound years later after the 2008 financial collapse. Okay, this gold extension over here for the last few months that broke into new all-time highs around 2075 was primarily due to extreme fear around COVID and economies being stagnant, and another reason that a lot of investors and people looked over for gold. Everything, especially gold, which is a physical metal, runs on supply and demand, correct? So gold is a physically traded precious metal, and it has many uses, and it's saved for its precious metal aspect. And that worst, if the world ever goes to shit, gold will always hold its value. That's the concept, okay? But when coronavirus shut down the world, and I like to say it that way, it did not just close down restaurants around you. You have to think about the macro impact, because gold mines around the world got shut down. Gold, sorry, so somebody just had a question here. You have a question, iPhone Jack? Whatever. So anyways, gold mines around the world were shut down, suspended, or production was halted. So you had extremely limited supply and delivery of physical gold, but demand was extremely high. Okay? So what do you have when you have a low supply of something, but a very high demand of it? high price, right? So because COVID shut down so many gold mines around the world, because the delivery of gold is being limited because borders were closed, because you had this mass market fear, you had this one-sided volatility of heavy demand for gold, limited supply, and overall market fear boosting its value. So what I'm trying to say now is after all that has happened, gold mines are now opening back up, production is coming back to normal, and we are at all-time highs where we could get a repeat of this. We could have gold playing in about $100 range per ounce, $100 to $200 range per ounce, ping-ponging up and down for the next 3-4 months, right? So yes, Jackson, investors do buy gold when there's fear in the market, but the situations fundamentally are very specific, and that is something a lot of people overlook of why gold was so bullish, was because all those global production mines were shut down, right? So low supply, high demand. But anyways, okay, so anyways, now that we understand some areas of interest that we have identified for gold, let me delete that. Now let's zoom in, because we understand the intraday, we understand the current market sentiment, we understand why gold fell, right? Everybody's following along so far, and if anybody doesn't know why something is happening, just rewind, because I started giving information as soon as this started. Okay, so you could just rewind the stream. Everybody else can always rewatch this too. But anyways, so for gold, we can see a flat candle body support being created around 1890, but I'm not looking to take buys or anything around this area here. I'm not looking to take a break below 1890. You guys can't rewind the live video? Or is that only after? Usually it's rewindable, no? Is that a setting I have to set up? I'm not sure. But anyways, you guys can always rewatch this. I will also give you guys a summary if needed, but anyways, so gold here. Yeah, this gets posted. This gets saved and posted. And then those are rewatchable. I'm just using the same broadcaster that Wix Don't Lie uses. But anyways, for gold, what I'm looking for is even if price comes down to 1890 again, even if price comes down to 1890 again, I would not take buys here. Or if price comes from up here or from where we are now and breaks and retests above this candle body price sensitivity area in 1 minute highs, we have failed to break above multiple times now. I could see that buy squeeze for the pullback up to 1902, and then I would need a break and retest on the 1 minute time frame to see buyers break above the key level and create a support there, and then then I would look to take that squeeze, that 50 pip upside to a 1902 retest based on that intraday analysis. Okay, so we're just gonna watch gold accordingly. If we get price above 1897, we'll get the alert as well. We got the alerts that automatically sent to the chat as well. But what I'm primarily looking for is the sells at 1902. But you can, that if we get that squeeze break and retest above 1897 higher time frame key level, as well as those previous 1 minute highs and price sensitivity area, we can take that 50 pip squeeze up to 1902, or at least catch 20-30 pips and set break even, and then wait for actual London session itself to see if we get that pullback and rejection around 1902 to take the sells back down. Because from an intraday perspective, after this impulsive move of about $40 an ounce, we're looking for about a 50% correction, about $20 an ounce, which would bring us around 1902, 1903 key level. Otherwise, safer sells would be a 1 minute break below 1890 flat, a break below these 1 minute candles. So that's the trade ideas we got that we're setting up and waiting for on gold. based on the fact that we have that US dollar strength. The US dollar does look like it has potential to turn more bullish, where if the US dollar gives us that squeeze and fills the gap to up to 93.8 higher time frame key level, and we have more of that market negativity, we can take advantage of EURUSD sells, XAUUSD sells, and potential USDCAD buys. And I'm also looking for, of course, further GJ sells, which I'll talk about next now. So any questions on gold? Overall, in a sell bias, either we're going to take sells at a break of these candle body lows at 1890, 1 minute break and retest down to 1883, or if we get the squeeze above 1897, we can take that pullback and then watch buyer and seller reaction at 1902, 1903 higher time frame key levels for potential sells down that way. Any questions in the Zoom chat about gold? We're looking for on gold and why. Anybody in the Zoom chat? You guys good? All good, all good. Okay, so we know what we're looking for on gold. We understand that the uncertainty around US elections, the uncertainty around Trump and the US stimulus, all of the US and Euro negative trade talks, the Brexit negative trade talks, the negative comments from the Bank of England is overall increasing market fear. We would just want a pullback to above 1897 to 1902, where we could take that buy squeeze up 50 pips, then look for sells at 1902, or a sell at a break and retest on the 1 minute below these candle bodies at 1890. So I'm just going to keep it on the 1 minute chart so we can start looking for our lower time frame confirmations once price does get to an area of interest. Okay, so GBPJPY. So as I was talking about in the trade room through New York, we had extremely negative headlines from the Bank of England talking about potential use of negative rates, how the UK economy needs more financial stimulus, and negative Brexit headlines. This, of course, brought a lot more sellers pressure to GBP specifically. And, of course, Japanese yen gained strength as a safe haven currency. Japanese yen, US dollar, and the Swiss franc. So we had a clean break of this market structure at 137.200, and we have a break of this bullish structure and a strong 105, well, from the peak point, about 160 pips sell-off. It does look like we are just about to melt down to 136 right now, but I'm watching how we react at these previous 1 minute lows where I'll set it up on the 1 minute chart. And I would prefer a pullback. I don't know if we're going to get it, but I would prefer a pullback to 136.8 and 137. So that would only happen. I would only take the safer buys if buyers break above 136.5. I see the pullback for that 30 pip squeeze and a potentially 50 pip squeeze to 137 flat psychological price level and just overall flat price level. And then if we have that market fear continue to hold and the buyer's exhaustion from 137 and sellers re-enter the market from that retest and 50% correction point of the impulsive move, plus we'd be basically retesting that broken market structure, this would be a great risk versus reward sell-off to new lows, okay? Otherwise, I'm just currently watching the price action, and I'll show you guys what I'm looking at on the 1 minute. I just would prefer a pullback. So you can see on the 1 minute, we are currently reacting at the exact same price point and lows. I am not saying we are going to bounce here, but this would be a higher risk buy area, just at least up to 136.5, okay? You can see sellers are reacting at the exact same previous low price. What would be the safer buys? As you can see, very strong bearish market structure on the lower time frame. So if you want to take safer buys on GJ for a potential scalp, first we validate exhaustion and sellers failing to break these exact same previous low points. Then we come above and break above and create a higher low above this bearish minor lower time frame market structure. And then we start developing bullish lower time frame structure, break above 136.5, create a technical lower time frame 1 minute support at 136.5, and then we can take those overall buys up to 136.8 psychological price level following the quarter point theory and 137 and watch the reactions accordingly. Otherwise, if we remain below this bearish market structure, like let's just say for London we spike up to 136.4, fail to break, and then come back down, I would take sells at a break of this low down to 136 and then a break and retest at 136. Right now it's only pre-London. It's only about 10 minutes into pre-London. We just have price right now reacting, generating some order flow. I just want to watch the reactions, of course, on the 1 minute, because we can observe price action the fastest on the 1 minute time frame alongside our previous areas of interest. Like this is pretty much around 136.2, and then yeah, if we can get a failure to break these previous 1 minute lows, a break above bearish structure, and a break above 136.5, that would be safe buys up to 136.8. Higher risk buys is right now. Medium risk buys would be above around 136.3 in the bearish structure. But with the sell-off we've had from New York and the sell-off we had through Asian, it would make more sense to get a pullback so we can get some of these sellers closing off their orders from an intraday perspective, as well as better sell areas tested on the intraday, right? But right now I'm not looking for anything particular. I'm just waiting for price action to develop. Overall, GBPJPY is extremely bearish. I would just prefer a deeper pullback on the intraday perspective to take advantage of better sells. Otherwise, it looks like we're about to break these lows and still maintain this bearish lower time frame market structure. And you can also see this order block area that will also be used as a resistance, even if we do get that. That's why the safer buys would be above 136.5, because you're coming above the order block. You're breaking above the bearish market structure. You're failing to break the previous lows. This is the safest buy option, is above 136.5. Even on London, if we pull up to here and fail to break above this order block and above 136.5, that would be, again, another good sell entry, as we're still respecting this area. Okay? So gold, we're waiting for either a break and retest above 1897 on the lower time frames and then taking that 50 pip squeeze up and then watching reactions, or sells below a break and retest of 1890. Even better if we get an intraday candle close below there. GBPJPY, we are not looking to jump in sells here. I'm not looking to jump in anything pre-London. I would prefer a deeper pullback on an intraday perspective to correct some of this downside move. Even if we get the pullback during London and we can go above 136.5 to 136.8, and then at New York have more sellers enter the market to revisit those lows, it would start to create some nice bearish market structure that we can play with on an intraday perspective. You know what I'm saying? But right now it looks like it's just breaking the lows. It's extremely bearish, but we will get some retest entry points on actual London sessions. I just want to start mapping out and always analyzing ahead of time, you know. I'm just connecting it from this peak sell point for some lower time frame structure, as well as this lower high point, as we had a nice impulsive reaction from this point and we came below this order block area. So I'm identifying that structure for those reasons, and we're gonna watch this accordingly. But of course, it is looking like Japanese yen and US dollar is stronger on that market fear, so we're gonna play that sentiment. All right, so we're gonna let that develop. We know what we're looking for on GJ, either only safe buys above 136.5, or if we did did dig deeper down to 136 and got a lower time frame support made and noticed some sellers exhaustion there, we could potentially watch that. Otherwise, we are waiting for a pullback at London Open to this order block area for potential further sells down, or as long as we remain in this lower time frame bearish market structure. Meaning if we come down to 136 right now for pre-London, then for London Open pull back to 136.2 and fail to break, we would just be taking the sells down with that structure. But no entries or anything as of right now. And we'll watch that closely. We got the news headlines open here to the left. More negative headlines regarding UK and COVID. Because the UK is in a 3-tier system lockdown, which brings negativity. Too many people partying in Liverpool. We got any Liverpool mans in the chat? Okay. So that's what we're looking for there. Gold, we're waiting. We might get that squeeze. All right, Euro USD. Similar idea. It would be ideal to get that pullback to 177 and then that sell down to the lows and previous lows. Start creating some bearish market structure. You can see right now we had the impulsive sell-off. And now we're in a bit of a consolidation in corrective phase. And the US dollar is looking stronger and we have more potential negativity on euro markets, okay? What do you guys? I'll read the YouTube chat after and answer any questions you guys have. Don't worry about that. If we were to take this buy squeeze up to that retest, we would need to come above these 1 minute highs, and that's only about 20 pips, but it'd still be a nice squeeze up for a retest. Otherwise, as you can see, very bearish lower time frame structure. The squeeze would only be if we broke above these previous 1 minute highs, and we'd be playing that 20 pips to the upside here. Just for that pullback, right? And possibly even a bit deeper. We'll watch price action accordingly. I like to watch price reactions and price action on the 1 minute because you see exactly where buyers and sellers are reacting and closing orders, right? So what would be ideal, of course, is that we break above these 1 minute highs around 1.75, get that 20 to 30 pip squeeze up, and then maybe at late London and late New York session, we get the sells down to continue this overall bearish structure and that US dollar strength and Japanese yen strength, global equities weakness as market fear is stronger, you know? So gold we're watching there. GJ is just reacting to these previous low points right here. USD CAD is the same setup. USD CAD has just been in this range, but the safer buys on USD CAD would be if the dollar continues bullish, breaks above this bear structure and goes to 93.8, as well as if you guys know the Canadian dollar and crude oil have a positive correlation. The fundamental reason behind that is because one of Canada's main revenue sources as a country is the exporting of crude oil. So whenever you have oil, crude oil specifically, very bullish, it means Canada's bringing in more money, so it boosts investor inflow of liquidity into the Canadian dollar. And it works the same way on the flip side. If oil is very bearish, it means Canada's bringing in less money per barrel, okay? But right now, because oil has been fairly solid and the US dollar has been strong, that creates fundamental indecision where you come into a tug of war between buyers and sellers, and it just comes into a bit of an intraday range. So the same analysis stands on USD CAD of safer buys to the retest of bearish market structure and then continuing down possibly at 1.324, but the buys would be above 1.31600, or the sells on a 1 minute break and retest below 1.312 if the US dollar turns bearish and oil continues bullish. Okay, Looks like we might get this gold squeeze. I just want to see how the hourly's looking, because the hourly already created quite a significant lower wick, and looks like if we can get a nice candle close above these 1897 highs and our key level, we'll get that 50 pip squeeze up to like 1902. But I don't want to jinx it, so let's just watch that accordingly. Remember, when we're looking for this pullback, you do not want to marry buys unless we get that market fear waved off and the US dollar turns bearish. Remember, we're playing a potential pullback here because overall sellers are in control, but the market moves in waves. So the sellers do want to get more entries at better positions. But as scalpers, as intraday traders, we can take that squeeze up. We can take that 50 pips. It's a great trade, right? So yeah, let's continue to watch that on the 1 minute. See if we can get a break and retest above there. See if we can get some any signs of some bullish structure developing. This doesn't look too strong, but I am going to correct it from this low point. And if we break above 1897 here, just to give us some areas of interest to work with. GJ is just messing around 136.2, and there we go. Okay, yeah, so does everybody understand why market fear increased, why there's more sellers pressure on euro, on GBP, why the US dollar gained strength, why Japanese yen gained strength? Of course, you can just read the trade room here again. Right? All of these negative headlines from the EU-US trade talks going on the negative side. Bank of England's negative view on GBP growth, Brexit negativity, US-EU negative trade talks, Trump's uncertainty regarding US stimulus. And then, yeah, that's of course why market fear increased and why those moves happened through New York. So we just want to get the pullbacks and play that overall sentiment. Yes, Chief, can we see GBP AUD? Yeah, sure. We can do a GBP AUD breakdown. Alright, so we're reacting right at our key level. We did not get a break above it yet. We are reacting right at this price sensitivity area in the previous 1 minute highs. We do need a break above the key level in these 1 minute highs to start looking for those buy squeeze up. So just be patient for that. GJ, it does look like sellers for now are failing to break these low points, but it's just playing around it. It'd be more validation on the, it would show me more validation of a buyer squeeze up if we get a 1 minute candle close above 137.2. Right? If we break above 137, oh, there goes gold. There we go. Watch gold, and if GJ breaks above 137.2 here and you get a bullish candle close above it on the 1 minute after failing to break those lows, I could see that pull back and squeeze up, and we have to watch the reactions to the upside. You know what I mean? We could get that pull back up if we get the candle close above there. Yo, don't jinx it, Jamar, man. Look, it's right below the key level. All right, let me read the YouTube chat. What's your Telegram group? All the information is in the description if you want to read it. I don't have a course. I have a bunch of webinars. I got like 40 plus for the capital hungry. Shit, what do I do here? Webinar vault. What's it called? Showcase? Yeah, this is it. I got about 40 educational webinars in the Capital Hungry private chat, but a lot of these webinars, well, not a lot of them, some of them are posted on the YouTube channel. So if you want to see about entries and confirmations and want to look for a valid entry, go watch the scalping series on this YouTube channel, Scalping 101 4-part series, and the other breakdowns as well, analysis breakdowns. You know what I mean? U.S. elections effect on gold in future perspective. Are you asking? Let me just make your question a little bit more detailed. I'll answer that. Are you asking me what the U.S. election is? People. Why did GJ drop from yesterday? I already explained that about like 5 times. Is because one, you had negative Brexit headlines. Two, you have the potential for a lockdown, and it is going to like a 3-tier system type of lockdown, if I'm not mistaken. And you also had the Bank of England speakers, right? The respected central bank for the UK, the Bank of England, giving a negative sentiment, talking about UK economic weakness. And at the same time, overall market fear was increasing. You saw Japanese yen also gain strength. So you get the one-sided volatility of sellers in GBP as well as buyers in the Japanese yen, which means GJ sells, right? Will I stream again next Wednesday? Yeah, I'll be streaming once a week if you guys enjoy it. Yeah, you could see some. I'll share some of the headlines with you guys here, but see these headlines to the left? These were during New York session. You guys can read them right here. Right now it's about 225. We're gonna get about a 30-minute candle close. So I'm also just waiting for London open itself to see what type of liquidity grab potential we get. And then I'm gonna keep it on the newsroom now. So these were the headlines. These were the negative headlines that brought market fear through New York. It's why the US dollar gained strength. It's why the Japanese yen gained strength. It's also why the US dollar weakened. I mean, sorry, not the US dollar. It's also why the British pound weakened. And it's also why the euro weakened against the US dollar is what I meant to say. Yeah, I'm also waiting to see if the candle closes above that point. Yeah, see, look at that. Who teased it? Look at the reactions on the 1 minute. That's what you want to watch. We need a break above these previous 1 minute highs and candle bodies and our key level. All right, so watch it carefully. We need the break above 1897 to extend these, to take buys up to 1902 to grab that squeeze. You can see we rejected there almost on the dot right now, so we did not get any candle closures above on the 1 minute. So just watch that accordingly. No confirms for that yet. Remember, gold is bearish, so you don't want gold to reject 1897 and then break this minor structure and go to 1890. That's why we want above these 1 minute highs, this minor order block, and the higher time frame key level. All right, because we're just trying to play that pullback as scalpers and then look for better sells when we get that 50% intraday correction of the impulsive sell move. Remember, this is just the 1 minute structure. We are trying to get a correction of this impulsive sell move to about 1902, 1905, and then look for intraday sells from that perspective. This is just the 1 minute potential structure. In GJ, we needed that bullish candle close above 136.2, which we did not get. So no buy squeeze up there just yet. We can see price is just in a bit of this range, and it looks like we're going to break lower, which is fine. We are still waiting for London open. But that is where I would have took an entry if we had bullish candle closures above this price sensitivity area after failing to break these lows and above psychological price level 136.2. But you can see we rejected there on the dot, and of course did not get bullish engulfing candle closures on the lower time frame above there. I'm just going to clean this up so you can still zoom out and see where we're reacting right now. Because what you want to do is, once you have your trade ideas mapped out, once you also have your areas of interest mapped out as per structure on the intraday, psychological price levels, your higher time frame key levels, you want to start watching buyers and sellers reaction at these price points, at these various highs and lows, as fast as you can to get as much information as you can. Remember, most mentors or people, when they teach, all preach price action, right? And all that is as the name says, the action of price, watching active price stand alone. what is the fastest time frame besides a 1 second tick chart to watch price? It's the 1 minute chart. This is where you see exact reactions. This is where you see potential changes in structure, momentum, exhaustion by buyers or sellers. This is where you can identify that information the fastest. And there's a bunch of ways for you guys to learn that on the YouTube. Like, you just go on the YouTube channel, right? So what we were looking for safer pullback buys was failing to break these previous 1 minute lows. And then if we had bullish candle closes above 137.2 as well as this bearish structure, that would show us more sellers exhaustion. It would also show us price coming above 0.200 psychological price level. So your first confirm would be failing to break these lows. Okay, your second confirm technically would be coming above a psychological price level, which on GJ is 0 flat, 0.00, 0.200, 0.500, 0.800. If any of you in the YouTube chat right now go to GJ and mark out 100 pip ranges and then mark out these price points and go on the lower time frame, you will see great reactions to these price points because it follows the quarter point theory between 100 pip ranges. That's where you see the reactions the most. All right, so your first confirm to take buys technically, and you would need all these confirms lining up to catch the pullback buys. All right, you would need sellers exhaustion and sellers failing to break these lows, which we're not even getting that confirmed right now. All right, we don't even have confirm 1. Confirm 2, price above 136.200. Confirm 3, price above this bearish lower time frame market structure, and then we could take that squeeze up to 136.5 and watch the reactions at this order block area. If we break above 136.5, that's confirmed 4 to extend that trade. Okay? Right now, we do not have any confirms to buy GJ. Okay? We have no confirms right now as of where price is now to buy GJ. Price can dip a bit lower to 136 flat, or by London dip down to 136.8. And what we will be looking for from that point, is a pullback to this bearish structure and then sells down to that low again. You get what I'm saying? We would have no confirms to buy unless we break above this minor bearish market structure and validate sellers exhaustion and buyers strength via the price action and shift in structure. Otherwise, if we continue to print a low by sellers, and then at London Open, we get a pullback to 136.2, 136.15 area and retest this bearish market structure, we are taking that sell back down to these low points. Very similar to like what you saw happen right here. Right? So let's just say here, yeah, the lower time frame is not just for scalps. You can use this for entries for any type of trade, intraday trade, whatever. But very similar to what we saw here, okay? After this low was formed. So, GJ was extremely dropping for sells. You can see price was respecting bearish structure. It would come below a psychological price level, like I was telling you guys, the 0.200, the 0.00, the 0.500, the 0.800. Look, price breaks, retest where? 0.500, right? Price breaks to form a new low, retest where? Almost like 5 pips from 137.200, okay? Then you had a very strong sell-off and you did not get in a medium pullback because there's two ways for the market to generate order flow to continue the trend. Either when you have a trending market and you have a sell move and then a pullback and then another sell move, pullback, sell move, and you generate order flow through the pullbacks, or you get a consolidation, and if that consolidation does not break structure, it is sell side liquidity. Okay, so for example, a lot of people would get mistaken here that a support is being created, right? You would see GJ melting down. You would see GJ melting down and you go, oh wow, look at this support being formed. But this is just liquidity being generated after such impulsive sell moves of over 200 plus pips, right? Whatever GJ fell during New York. You cannot start taking buys from this point unless we broke above 136.5 and the bearish market structure. This would be where you could see buyers pressure and sellers exhaustion. Then you could validate this liquidity that was being generated was for a pullback and buyer side liquidity. Otherwise, if you have a bearish structure, if you have a bearish current price action on GBPJPY and you know the fundamental reason behind it, what is this? This is seller side liquidity. You're not getting a break above your key level 136.5. You're not breaking above bearish market structure. You have no reason to buy here. This is just liquidity being generated for a sell. Then what happens? Then you see an impulsive sell-off to create a new low. A new low is created by sellers, and where's it go to? Around 136.2, we can say, the psychological price level. You see the drop from 0.500 to psychological price level 0.200 on GJ specifically, right? Then here, we could have had something similar. We could have had price consolidate all the way until now, then drop. But no, what did we have? We had a pullback to create a lower high and then a continued sell-off to a potential new low right now. So what I am saying is right here, as we've already had this pullback, as we are already breaking below this potential previous low, I am looking for a new low to be formed at either 136 flat or 136.800 psychological price level, and then a retest or a similar repeat of price action in this fashion and a retest of our 136.200 and then sells down. Right? Does that make sense? Because if we come down here to print a new low, we are just playing that bearish trend, that bearish structure. Right? We are playing the seller side structure, the seller's price action, the negative Brexit tensions. Okay? That's why safer buys, we would need to identify sellers' exhaustion where we currently are. We would need sellers to fail breaking below previous lows. But right now, we're pretty much hovering 5 to 10 pips up and down below it. Not even 5 pips below previous lows. These were the previous intraday lows or 1 minute and intraday lows created by, yo, you guys keep jinxing gold every time you guys say that. Anyways, you guys keep jinxing it. Every time we talk about it, if it rejects on a dime. Look. Who jinxed it this time? Jacob. Don't worry, it's okay. But anyways, we're still waiting for gold. This is looking like some solid rejections. We need a break above these 1 minute highs. We need the break above 1897 and close above, right? We can take that squeeze up. But anyways, so for GJ, that is why safer buy scalps and deeper pullback scalps, we would need this sequence of events. 1, we fail to break below these previous 1 minute lows. Where even right now, if we pop back above 137.2, this to me is not really a significant break below previous lows. It's only about 5 pips below it, okay? Okay? 2, we fail to break below these previous lows and we come above psychological price level 136.200. 3, we break above the bearish market structure and create a lower time frame support and higher low, so we can start identifying bullish market structure. Then we could take that 20-30 pip squeeze up to 0.500. But we have to be very, very cautious because it's going against the trend and we have an order block that we will react to when we come back into this area. We would only be able to extend those pullback buys if we broke above 0.500, right? But right now, it looks like we are just playing this overall structure. We're going to get a new low created, and then we can bounce back and take further sells down. You know what I mean? We can only take buys by validating sellers' exhaustion and breaking above that structure, and also noticing the Japanese yen index standalone weaken overnight. just going to put this down around 136.8. Sorry, 135.8. Brexit. EU leaders tell the negotiators to intensify the talks. Brexit. EU summon bill. Brexit. EU summit to decide a step up to the no deal preparations. So a lot of negative Brexit headlines still, a lot of uncertainty around Brexit still. It's looking like we're just going to continue the bearish structure. We'll get a pullback for London Open, and we'll take some further sells down. But we have to be very cautious. A lot of Brexit headlines. Can you guys read that to the left there of the screen? The Capital Hungry private chat already has access to the newsroom though anyways. Yeah, gold, if we break above these 1 minute highs on gold and create a minor support above 1897, we'll get that squeeze. We can start taking those scalp buys up, and then we might be able to get that squeeze up to 1902. Euro USD, we were only taking buys above 1.7500 if we can just get that pullback. Otherwise, we're watching to see where we can look for potential sells on the 1 minute with the overall trend. It would just be ideal with how Euro USD, gold, GJ have fallen through New York session and through Asian session both, that we would get some type of pullback through London and then continue the trend probably through New York in the morning if nothing changes the overall fundamental sentiment, you know? That would be ideal. In USDCAD, potential sells below 1.32. YouTube, if we can get another, how many viewers did we get last time on the YouTube? 50, 100? If we can get 100 viewers again, I'll take it. You gotta grind this out. This is only my second time streaming, you know? Alright. Nope, lower time frame. So why don't you see every video yourself? YouTube chat. Any questions in the YouTube chat? Any questions in the private Zoom chat? Yes, sir. I just showed you the reasons why there. This gold squeeze looks good. I don't want to jinx it though. And we still got time. I'll be running this for the next 2 to 3 hours anyways. EJ rain probably looks exactly the same as GJ. You have to understand, when you have risk currencies, especially both facing negativity, like Euro, CAD, GBP, NZD, AUD, when you have one-sided fundamental market sentiment and your safe haven currencies start to increase strength, you're going to see the same move across all those pairs. Okay? You're going to see EJ probably looked the exact same as GJ did today. Probably very similar. Probably did the same move at Asian. So I'm seeing the same thing I see on GJ, I'll see on EJ as well, but I'll break down EJ for you in a second. If GJ breaks the bearish trend despite the negative headlines, what does it mean? This bearish trend is fairly lower time frame trend. If GJ does break this bearish trend and do a deeper pullback to, let's just say, 136.8, you have to understand we are looking at the 1 minute chart, and that would just be a pullback for more sellers to enter the market with that overall GBP negativity. Because if there really is that much GBP negativity, I would personally assume that sellers would want to get better prices, right? Because even if we pull up to 136.8, 137 flat, on the intraday perspective, we would still be extremely, extremely bearish. You get what I'm saying here? Yes, when we're looking at the 1 minute chart, that looks like a massive pullback and a huge break of the trend line and structure, but that is very lower time frame structure we are just trying to take advantage of to identify when we can call a pullback, right? Even if GJ pulls back to 136.8, would you say it is bullish? No, right? On the intraday, it is still very bearish. You had this impulsive sell move. You had buyers fail to break previous intraday highs at 137.8. You have all this Brexit negativity. You had about that 137.8, almost a 200 plus pip sell off, a break of intraday bearish structure that's been holding for like 30 days. You know what I mean? It's been holding for the last month. We had a break of that structure. It would just be, and this pullback would be creating new bearish structure. Even if we pull back to 137, let's just say we range here for a bit, come above 136.5, pull up to 136.8 and create a lower high. What are we having forming then? Bearish market structure on the intraday that we start playing and taking advantage of, right? Then we take it from the peak point, this new lower high point, and we ride that right back down to new lows and we play that bearish structure. Right? No, Mr. Potts, it was yesterday. Well, personally, my trading rules, I do not trade. I do not trade Sunday, Monday, whatever. I trade only Tuesday, Wednesday, and Thursdays, pre-London till New York. And also, yesterday was Canadian Thanksgiving. Like, I'm from Canada. So yesterday was Canadian Thanksgiving. Deshaun, you like these? You like these? I'm gonna do these. I do these when I'm actively trading as well. I'm not gonna do it on when I'm not trading, but I still send the casual Zoom links which aren't recorded. Like tomorrow I'm gonna send that as well to make up for the one trading day I missed. But yeah. You know what I mean? Okay, so now on GJ, let's just go back to identifying that structure. I gotta go to the washroom really bad. One sec. I just connected from the wick points there, just where we had this sell-off. Yeah, the more aspects of your trading you can control, the better. See how we're closing right at 136.2 and not breaking higher? If we can get that break above 136.2, I could see that buy squeeze up. And remember, we still have London session open. So be patient. Gold could easily, it's not like gold has broken that much higher above 1897. The new hourly could easily pull back, right? So if you guys are in an entry, like watch your risk and set yourself risk free, because we still have London open itself and then London session, right? This is only pre-London hours. I know I give a lot of information. I'm just gonna go to the washroom quickly, all right? Any questions, please leave in the private chat or leave in the YouTube chat. I'm just gotta go to the washroom. And for anybody else, just share share this YouTube link around. You know what I mean? Send if anybody else wants to come watch. But yeah, let's just wait for gold to actual London open. If you have a position, probably best to secure, leave it risk free, watch your risk, and then we'll wait for that. We still have time, right? What time is it? Yeah, we still have 13 minutes to actual London open. These key levels are based on higher time frame candle body historical value points. So these white lines you see, Albin, they're based on yearly, quarterly, and monthly candle body conjunction points. So they have historical value. That's why you see great reactions to them, and you could go back to gold for like months ago. You know what I mean? So I like to use these levels from an intraday perspective. And the reason 1902 is a target is because from this impulsive sell-off where we had this order block area and resistance created, and then we had US dollar strength come into the markets, which of course would have an inverse correlation in weakened gold, we had about a $40 sell-off, right? Usually the market moves in impulsive and corrective waves. If we are going to continue bearish on gold, most of the time you'd get around a 50% correction, where that 50% correction would also line up with around 1902 higher time frame key level, right? So we are just looking to see if we remain above 1897 to take that squeeze up to 1902 and then look for potential sells around 1902, 1903 back down to the lows, right? This is heavily dependent on the US dollar. We just want to be cautious right now because the US dollar is looking more bullish, so this could decrease the chance of our 1897 buys, right? We are just trying to take advantage of a pullback. We do not want to fight the trend or the current price action. That is why I'm saying be very careful and set yourself risk free and don't risk anything on these. Okay? So when you're going against the trend and you're just trying to catch a pullback as a potential scalp, and you're going against current sentiment of US dollar strength, against the current market structure which is bearish, and against the current price action which is bearish, you just want to be extra careful and mind your risk and don't even take a loss. Just set it risk free or wait patiently, right? Because it looks like we're gonna dig a bit deeper here, but right now that's a nice retest. Okay, perfect. So on GJ, we are breaking into new lows now, which is good. And what we are looking for London Open is that we're extending this bearish market structure. If we can have price create a low around 136 or 136.5.8, we are going to wait for the pullback to 136.2 and then take the sells back down. All right, we're just waiting to play this structure, but I just got to go to the washroom. Just give me a second. Yeah, sorry, I was in the washroom. For dropping jewels. Yeah, we're gonna we do these zooms up to 3 times a week, but 2 of them are not recorded because they're longer, and we're not scalping through it. We're looking for intraday trades. Yeah, I say when to. Well, sorry, I can't give financial advice, but like I say exactly what to look for when to execute a trade and the reasoning behind it, but it's up to you what you want to do with that information. Yeah, I can't give legal financial advice. Face cam? Should I get a face cam going? You guys want a face cam? That was a nice retest on gold though from 1897 right here. If it breaks above these 1 minute highs, you can get a nice that scalp squeeze for anybody who's still in it. But again, just watch your risk as we still have London Open coming up. The day trend for gold is fairly bearish due to US dollar strength and breaking below key levels like I already highlighted on the higher time frame here. Gold of course is very bearish. We are just trying to take advantage of a potential pullback and 50% correction to around 1902 and better sells from 1902, you know. Otherwise, if we remain below 1897 and this hourly closes below 1897, then it's not looking the best. We just had this hourly candle just open. Just be cautious as it has a very minimal lower wick, but we are above 1897. It is London Open right now. Let's see how this hourly closed on GJ, and this one is already grabbing some liquidity, so it would be ideal on GJ right now to get a pullback to 0.200 and then look for potential sells back down to new lows or a break and retest below 136. I would only take corrective buys and pullback buys on GJ if we broke above 136.200 in this minor bearish market structure, as well as where we've seen all this rejection already. If we break above here, the magic yellow line, then I take this buy squeeze up to 136.5 for a deeper pullback. Right? So just watch out for gold now as it's retesting around 1897. Did have a nice retest. You're still in your gold. True. Yeah, it wasn't the strongest hourly close. That's the only thing there. Mar, I'm also with you looking for gold sells, but I would just want a better risk versus reward and a deeper pullback. If we could get that squeeze up to 1902, would be better. What if GBP falls with no retest? Well, when I'm actively trading, looking for these intraday trades or scalp trades, I'm usually more looking for intraday trades, and when I'm doing that, I'll be watching the markets from about pre-London till about New York, and there is pullbacks during this time. You just have to be patient, right? I don't like to take too many trades or rush too many trades, so yeah, gold, just be careful here because it's still looking like it's messing around key level. It's gonna break, sorry about that, it's gonna break below it, so we might catch the sells below at a retest. And JPY, we're just GBPJPY, we're waiting for that pullback or that break below 136. EU, of course, we did not get no buy confirms. EU have a nice 4-hour support. Is it valid support, you're asking? This 4-hour support, are you looking at, Wolf? At 1.733? I would not say it's a valid support just because there's a higher potential that we're going to break those lows if the US dollar continues bullish. Another reason why I was saying I'm iffy about these gold buys here for that squeeze is because the US dollar is still closing bullish when we're looking at it from an intraday perspective, and we have that potential to break higher. So yeah, gold buys are not looking good. We're gonna probably get the retest sells down because it looks like this was the pullback here. You know what I'm saying? Like this was the impulsive move and this was the corrective phase. It just would have been ideal to get that extra pip squeeze to 1902 so we could take better risk versus reward sells down. I'm not saying we're not going to get that, but that would have been ideal for me. This is still a good nice sell from 1897 if we get the retest in the lower time frame and it failed to break above higher. But yeah, everybody should have been risk free though before London Open anyways though for gold. And then let's see if we get a nice retest. Pretty much react at the same area. Damn, did you guys see that? Fucking flash quick on myself. Yo, is that just a quick liquidity grab? Because if this breaks back above, we're gonna get that squeeze. I'll probably take a buy, put a buy stop at like an 1898 breakout, but otherwise no. I'm just playing above this 1 minute high point to be safe. No, not 1897, above that 1 minute high point, because that's still a good squeeze. GJ, I still want that pullback. I don't care if GJ right now, personally for me, drops down to like 135.8. I know that we will get that pullback to retest that structure and further sells down. So I'm just gonna patiently wait for that. Global equities are starting more bearish, specifically US futures, UK active, Germany's active shortly. Dollar is continuing more bullish, so it looks like more potential for Euro USD sells at the break of these candle body lows. UCAD buys would still be above 1.316. There's a reaction to 136 key level now, making new lows, which is good to see. Now we're just going to wait for the pullback and better entries. Gold looks like it's going to melt if the US dollar continues bullish with that inverse correlation. So I would only take buys at a breakout above 1898 at this point. These white lines, one sec. These white lines are higher time frame key levels based on historical value points, like on the yearly, quarterly charts, 3-month charts, and the monthly charts. Right? The red boxes are psychological price levels in between the ranges to watch reactions. Right? These are placed based on quarter point theory, and like for example at 0.800, 0.200, 0.00, and 0.500 in between the ranges. That was a nice retest of 1897 right there, because the US dollar is continuing bullish. The US dollar is continuing nice and bullish. It looks like it's going to break above this structure and run the way up to 93.8 overnight. And if it does that, more potential for gold sells even deeper, Euro USD sells, and USDCAD buys. Dow Jones probably sells as well. I would take Dow Jones sells below 28,600 down to 28,400 because we want that deeper pullback anyways. Jamar, didn't you close? Yeah, you closed break even, right? Did you jump in the retest sells? Because it looks like it's just going to melt after that retest there. Yeah, don't worry, we'll get it set up there anyways. I'm more looking at GJ because it's coming down to 0.800 as we expected. The 136 break sells were a good sell scalp squeeze as well. But I'm personally waiting for the pullback and then better sells. Who's this? Oh, you took the sell scalps below 136. You got 15 pips. Nice job. Nice scalp. So yeah, Mr. Targus, the red boxes, they're psychological price levels that follow the quarter point theory between larger, higher time frame 100 pip ranges, right? So these 100 pip ranges are divided into quarter points, but back tested on GJ. If you go set up these points between the 100 pip ranges at 0.00, 0.200, 0.500, and 0.800, you will see great reactions on the lower time frames at these price points being used as either supports or resistances, either for buy entries or sell entry areas, depending on the market structure at that time. But I'm just saying, if you want to back test it, you could go do that yourself and see it, you know? Yeah, no problem. So that's where we are watching the reactions. So like for example, you could see before we had this no, it doesn't have a certain size. It's just to mark out those prices for me. Besides the white lines. The white lines I just personally know for my preference are the higher time frame zones with historical value to them, right? They have historical value because it's based on yearly, 3 month and 1 month and 1 month price points, right? Because the reason for that is because in the real business world, in the economic world, the fiscal year, the quarter periods, and the end of month and beginning of month have significance, right? You always hear about quarterly reports, fiscal year reports, end of month processing, beginning of month processing. These periods of time have financial significance. So when you find historical price points by looking at the charts on those specific time frames, um, you see great reactions on an intraday and lower time frame perspective. Like you could see, for example, on gold, you can ask any of the capital hungry private members, how long have we had these gold levels for? Maybe like months now, right? And you can see the reactions even in the last week or two from these exact almost price points, right? These are like a cheat code. You guys when I'm streaming for free and you guys see these gold prices, they're basically like cheat codes. Like for example, right here, how we didn't really get a clean break above 1897 as per the candle closes. We didn't have any real validation to take further buys or look for a deeper pullback unless we come above there. You can see where we're starting to get a sell right at London session and that market open is at this around 1897, 1898 price point, right? Or even when we had this massive sell-off, where did price pull back to? This higher time frame key level, and where did it melt to on the dot? 1883. I'm not saying it always hits these price levels exactly, but especially the gold higher time frame levels, you see really great reactions. Like in this quick break and retest of 1897 to the downside, was very fast and quick too for about 20 pips. I'm just waiting now for better sells on GJ because there is a lot of sellers pressure on GBP with all the negative headlines from New York and the negative headlines that we were just looking at come out regarding Brexit uncertainty, negative Bank of England statement, and as the Japanese yen has strength, right? US dollar's continuing bullish, which means gold's going to continue to drop. EU's breaking the lows for the sells if anybody got in those sells. UCAD, we're only taking buys above 1.31600 just because it's been in this range, because you have that indecision on this pair specifically because both US dollar and CAD have had short-term strength. CAD strength primarily coming from bullish crude oil. Okay? That's why I was saying at London Open, that's why I was saying the buys here do not look as appealing because the dollar was continuing bullish and it looks like we were failing to break above these previous 1 minute highs. Like you could put this right here. This isn't a key level. I'm just showing you the exact reaction of buyers. Like if you mark off this exact 1 minute high point, This is exactly where buyers reacted again, right? And then created a bit of a consolidation and then broke and retest below the key level, with the US dollar also having strength. But but we weren't in a buy bias anyways on gold. We were in a sell bias. We were just looking for potential pullbacks to better sells, and we could take that buy squeeze up if we had the confirms, but we did not get clean enough breaks or that validation of the, if the US dollar was to give a deeper pullback at that time, let's just say at London Open we noticed the US dollar didn't break this high and it was doing a pullback first, then I would say, okay, this gold buy squeeze also makes more sense. But the fact the US dollar was already continuing bullish right at London Open after closing pretty much and creating this bullish liquidity zone here, it just made more sense that we were going to start to get this squeeze up to 93.8, where that US dollar confluence with market fear would again give us higher potential for EU sells, UCAD buys, and gold sells, right? Gold sells also from a safer point too, we can scale in if we don't get another pullback, is below 1890, and that is just these intraday candle bodies, where if we get a nice intraday close below those bodies, we should make the ranges back down to visit 1883 again. Right. Gold could be making its bottom wick, reacting to the previous price sensitivity area. USD on that bullshit. Yeah, USD is bullish from the Fed comments from New York and Trump stimulus confusion, right? Trump keeps going back and forth on his economic stimulus plans. So that of course brings more bullish boost to the US dollar and weakens US equities. All right, GJ. We're now getting a reaction at 135.8. Let's see if we can get a lower time frame support. So see what I was talking about? See how price, even for a second, it's reacting at around the psychological price level. Like it just had that melt, and now we're just starting to see it react at 135.8. If we can get that lower time frame support formed and then that squeeze up to get those better sells around that 0.200 retest, we can take those sells right back down to the low. Very similar to like right here, we had this consolidation, that impulsive break to 136.200, then that pullback to bearish structure, and then those lows revisited and new lows formed. So that's what we would be looking for, is if we, once we had this new low formed by sellers right now, if we can get that pullback, more sellers in the market, and then continue down. But right now, we're just watching the reactions at around 0.800. Yeah, gold is looking more bearish on the daily perspective, especially after that very strong bearish engulfing daily candle on the previous daily, and as we retested this order block area and failed to break higher. Plus with that US dollar strength, it really depends on the US dollar, as the inverse correlation has been more prominent. So if we can see the US dollar make that squeeze up to 93.8, the probability of gold going back down to revisit 1883 at least, and then go deeper down to like these candle body lows around the 1860s, I would see as a next sell target. Like for the take profit target for sells, not to sell there. I don't like to sell at the low. Euro USD is breaking those lows as well. There's no what would have been ideal for Euro USD, what we were looking for was that pullback to test this bearish structure and correct 50% of that seller's impulsive candle, and then I wanted to take sells from that point down. Otherwise, the break of these candle lows, but still I'm also looking at a break of 1.72 to take it down to 1.685 for possibly New York session. Because dollar's looking bullish. Let me clean some of these yellow lines so you guys can see the dollar real time as well. And for those of you who missed it, these on the left were the negative headlines through New York session that impacted and caused GBP bears, USD bulls, Japanese yen bulls, and really increased overall market fear, like the Euro and US trade tensions, the Bank of England talking about GBP economic weakness, the Brexit negative tensions, the US stimulus tensions from Trump, and then we also had some negative comments from the Feds regarding needing more US stimulus. No, I am not in any trade right now. I'm personally not scalping. I was just sharing potential scalp ideas, like if anybody wanted to take the break of 136, or if we got a pullback to 136.2. If anybody wanted to take that break and retest of 1897 or the break of 1897 for the sells. But I'm waiting for more intraday trades because I only take about 3 to 5 trades a week total for only about a 3-day period, Tuesday, Wednesdays, and Thursdays. But this is what I do anyways. I just be waiting for the trades. Did any of you guys get that quick retest at 1897 or the break of that low in the chat and the private chat? Because that was quick. That was a fast retest and melt. Almost 40 pips down now. I trade these main pairs, the ones I'm showing you guys, for several reasons. One, because they have very good liquidity, like Euro USD is one of the most liquid pairs in the market, and because of the correlations of the impact of investor sentiment. Okay, Anthony, you got the sells? Oh, you're up like 30 pips. You could bag 30 pips. Good job, bro. GJ's low-key giving you FOMO. Don't worry about it, man. GJ, I know we're looking at the 1 minute right now. It's melting, but it is 1000%. If it's gonna continue bearish through New York and, like, you know what I mean, it will do a pullback to, like, even if it comes to 135.5 right now, it will do a pullback to 136, create that lower high, and come down again. Do not worry about that. All right, trust me, Fahad, on that. Trust. I've very rarely seen GJ melt hundreds of pips without giving a significant pullback. So that's why now all I did now on GJ was extend that bearish market structure from this peak sell point to this sell point where we had this pullback to 136.5.4 area. And now I just extended this bearish market structure. I am not in any GJ sells. I did say people could take the break sells at 136, but I'm still waiting for a support to be formed, not to take buys, but to identify a potential pullback and take those sells at the retest of that bearish structure. Very similar to we've seen GJ do many times before. Right? It'll do a pullback, so don't worry about that. Yeah, just of course watch your guys' risk if you're scalping. If you're scalping, remember, I'm looking for intraday trades where my stop loss is going to be 20 pips and my take profit is going to be 60 to 80 pips, right? So I'm not looking to secure positions as fast, or once I'm in an entry, I'm not continuing to watch the 1 minute price action. I just use the 1 minute concepts and the lower time frame concepts alongside the key levels for entry points. Right? But once I'm in a trade, if I'm in the intraday trading mindset looking for a day trade, right? And I'm looking for an 80 pip target, and I'm sacrificing 20 pips because I'm going for a 1 to 4 risk versus reward, it's a lot different when you're a scalper and your take profit is 10, 20 pips, 30 pips. So for you guys who said, who got it? Deshaun, Anthony, Chris, For you guys that got the gold sells, you have to follow your plan in the sense that you have to understand if you're scalping or looking for intraday. If you caught sells from 96, 96.5, 97, 96 even, this was 30 pips. Okay? As a scalper, that's a scalper's dream, is 30 pips in a few minutes. Because remember, when you are scalping, you are looking to be in the markets for a very short period of time, scalping smaller pip ranges. You get what I'm saying? I'm not saying it's not going to continue down or it's going to continue up. I'm not talking about the rejection, and that is something key to note, is see how price rejected right at this previous 1 minute low point. But I'm not talking about that. I'm just talking about if you are scalping, if you are in the mindset of a scalper, if your trading plan is telling you that you're scalping a 1 to 2 or 1 to 3 and you risk 10 pips to make 20 or you risk 10 pips to make 30, do not break that plan or start moving your take profits or trying to look for more. If you're in an intraday trade, okay, fine. Hold your position, set it risk free, set your risk accordingly. Right? But if you're a scalper, do not get greedy when you took a scalp on gold and you got paid about 30-40 pips in about 4 minutes. Right? Just keep that in mind. That's why I'm personally, and that's why as a scalper you want to secure too. But that's why I'm personally not in as much of a rush, because I am waiting for intraday setups. Right? This is actually a good reaction on this hourly candle to these previous lows in this candle body sensitivity. But obviously we're just watching and letting price action develop. We would only take buys on gold anyways at a break of 1898, previous 1 minute highs, where we have noticed buyers fail to break multiple times now. Okay? GJ, we're still waiting patiently for an intraday, and that intraday setup in a pullback. But for anybody that took the sell scalps at the break of 136, you also got 20-30 pips. US30, Joseph, I am not in a sell bias in US30. I think the stock market is extremely bullish, especially since that COVID crash and with the Fed's money printer, right? The US stock market will never take a full crash, because that will mean the corporations in the stock market will all go bankrupt, and that's never going to happen. That's why when the stock market hit 17K, it hit the circuit breaker, you could no longer short sell it, and then you had the Feds print out massive amounts of US dollars and flood the markets. That's why you saw the US equities turn so bullish, because of that financial support, but the supply and demand of the US dollar being so heavily overprinted and oversupplied caused it to turn extremely bearish on the higher time frames. Like, yes, we're playing some US dollar buy bias right now, right? But if you go to the US dollar, if you go to the US dollar on like a higher time frame chart on the daily, it's extremely bearish, right? This is because that Federal Reserve printing was a double-edged sword that was done by the Feds. It heavily oversupplies the US dollar and the amount of US dollars in the market, which devalues the US dollar, but it also supports US stock markets and US equities, which of course supports the whole US economy, because the US economy is built on all those corporations that are in the stock market in every single sector. Food, pharmacy, technology, tech, it doesn't matter. Those companies make up the entire US economy. If the US stock market crashed and actually went to zero, for example, like how oil went negative, all of those companies' stock prices would have been worth nothing. And all of those companies would have went bankrupt. And that would have been a real economic depression. You get what I'm saying? So I am not in a sell bias on Dow Jones, but from an intraday perspective, if we can get a break below 28,600, I was looking for a pullback for better buys anyways at a retest of this bullish trend line and at a retest of this Trump stimulus price where we had this first sell-off. was around 28,329, 28,330. So I would take that would be a potential sell, scalp, and squeeze for about 300 to 400 points to set up for better buys. You know what I mean? We just hit new intraday highs on Dow Jones. We have some market fear developing. It would make sense to get that pullback, better, more buyers into the market from better positions, then continue up to new highs because the market moves in waves, right? The crazy thing about Dow Jones was even here when Trump got coronavirus, it got instantly waved off as he said he's healthy, and Dow Jones printed a new high by buyers. This sell-off here was caused by Trump denying the stimulus, saying he was not going to do the stimulus. Then he changed his mind an hour later. We went into print new highs, right? Now we're getting more doubts around stimulus. We're getting some market fear developing. It's a slower correction down, but if we could get a break below the key level in this order block and minor support at 28,600, I could see a similar correction and then take better buys all the way up to 29,600. That's what I see on US30, Joseph. You get what I'm saying? Yes, I do use sell limits and buy limits at key areas of interest. Yeah, so I'm not looking for sells now. Safer sells would be a break below these our higher time frame key level at 28,600, and then yeah, I would want to watch the reaction for buys here long term. I would only take further sells if we really came below 28K, because if we come below the price 28K and we have a lot of market negativity, we're coming below the Trump COVID price where we had previous fear, and we're breaking bullish structure and we're failing to test previous highs again, and we're shifting into bearish structure, right? But obviously we don't have even close to that right now. I just like to roadmap and forecast price a lot. But it was crazy. The Trump stuff was crazy because I caught the Dow Jones sell. What did I catch? The sell? It's in here. Fuck. That was the buy dip. So I caught the stimulus buy dip, but before that week, I caught this Dow Jones sell. Look at this. This 10 loss sell. That was from when Trump announced he got COVID. We got the alert in the newsroom. We got the alert instantly in the Capital Hungry newsroom that Trump got COVID. And then on the 1 minute, we saw the rejection, but I instantly took that sell. And you can see it just started melting. Crazy entry too, right? No, it closed up at 27,670. I shouldn't have said, I meant like it closed stop loss and profit. And then after that got corrected, which was here, after that got corrected, and then we had this stimulus dip that did not break bullish market structure. I had the same concept and thought process in mind that move was going to get corrected, because if Trump getting coronavirus was not enough to break market structure or break below key level, and then that instantly got corrected, there's really nothing that's going to drop the stock market. You know what I mean? Trump had to die from coronavirus to continue down. So then when Trump said, and he was off his meds, and we had a new intraday high peaked by buyers, we respected breaking above bearish market structure and above higher time frame key level 27,350. Trump's COVID fear was completely corrected. This sell-off, yes, it was very aggressive, but I took those buys, and I told everyone the same thing in the chat, that most likely this will get corrected by the next day. Same thing with the COVID crash, because it's not breaking bullish market structure, and it's not even going to test previous lows. And then of course we had a lower time frame 1 minute support, and 1 hour later Trump went back on his word saying no, he's looking to do stimulus still. And then we have that correction right back up. Are you looking for gold to break 1898? No, we are in a gold sell bias. We would only look for buys on gold above 1898. We were looking to take a buy squeeze retest of up to 1902 for better sells at 1902. But overall, gold on the intradays is extremely bearish due to US dollar strength, right? So because, let me go back here, guys. Sorry about that. So because the US dollar is holding strength, because market fear is picking up, the inverse correlation of US dollar strength and gold weakness has been more prominent. So what we were looking for was that we had a very strong impulsive sell-off of about $40 an ounce on gold, or like 400 pips, or however you guys like to say it. So what would be ideal is a 50% correction of that downside move and then sells. So what we were looking for is if we could get a break above 1897, but specifically those 1 minute high points that were created, it would give us higher probability to take that 50 pip squeeze up to 1902 and then take sells at 1902, right? But then instead we saw the pre-London candle pretty much close only about 5 pips above the key level, pretty much on the key level, and then following London open, retest those 1 minute highs and break below the key level, and then break and retest below the key level. 1902, any of these white lines, and you guys can rewatch this again when it's saved, any of the white lines are higher time frame historical price levels based on yearly, 3 month, and 1 month price points that have historical significance behind it, where you've seen where you don't see reaction to these price points just on the 1 minute or on just on the 1 minute or just on the intraday. You see candle closures, or break or respect or rejection to these price points on like the yearly, on the quarterly chart, the 3 month chart, the 1 month chart, right? So they have historical significance that still stands to this day. Most likely it's algorithms. Most likely it's just computer machines that are designated to do buyer or seller reactions at these price points. We will never know what's going on behind the scenes. You know what I mean? But yeah, it just so happened to be that after that $40 sell-off from this consolidation order block area or resistance, whatever you want to call it, that fits your terminology, we had an initial break and then a retest of 1923.5, and then that $40 melt. In the market, when usually you have an impulsive move, to continue that trend, there's usually around a 50% correction. So like around $40 melt, $20 upside would line up around 1902, 1903 as well, right? So that would have been ideal for us to get better sells. And then from that point, you would also have more stronger identified bearish market structure as well, right? No, the US30 buys I was talking about, I took after Trump stimulus. These were the US30 buys at 27,850 down here. 27,850. I took the buys here because first we had him with the negative stimulus talk. Then we identified that negative stimulus talk didn't even bring us to Trump's COVID price, didn't break bullish market structure. And then since Trump an hour later went back on his tweet, and then I took those buys because it just made sense with how the stock market is so bullish. You have that Federal Reserve support. You have Trump going back on his words that move was going to get corrected. So I took those buys back up. Right now, pullback buys right now, I would just be looking for a retest of the structure, because you could see, sorry, let me put it back on the newsroom. You can see we are trending pretty cleanly on this intraday ascending channel, where we're having buyers create intraday highs, pullbacks to higher lows, and then moves up. So it would be ideal for me, as we have peak new intraday highs, to go around 28,400, that previous Trump price, and then continue the way up. That would be ideal. That's just why I have that identified as a potential pullback point. Right? Gold is coming back up to the key level after rejecting this exact same previous price point around 1893 flat. Again, for buys, we do need a break above 98. So anybody who got those sells around 97, 96, you did get a nice 30 to 40 pips. But for the buys, we would need that break above 1898. Especially if this hourly candle can end up closing bullish. That would be very nice with the liquidity it's already grabbed from this downside move, that we can now follow up with that squeeze to like around 1902. We still have about 20 minutes till this candle closes anyways. As per the headlines, it's looking like that negative sentiment is still holding strong with the US dollar bullish, Japanese yen bullish. Overall, equities are still fairly flat. And we're looking at UK here in the middle. You guys can see that it's still fairly bearish after retesting that previous broken support. Germany, fairly neutral. USA is showing some exhaustion. Dow Jones there, which we were already just looking at. GJ, looks like we're going to start to get our pullback. I don't want to jinx it, but I'm looking for that pullback around 136. Even if we get it with the new 4-hour candle where Asian session closes in the next hour and a half, if we can still get that set up for New York, it'll make sense to continue the move down. We did have more negative Brexit headlines overnight as well, which we already started to identify. Did any of you guys take the scalp sells at the break of 136? Because I don't use sell stops or buy stops, but I know you guys like to use it. I know some of you guys in the chat like to use like buy stops and sell stops. All right, let's see what other questions we got here. The time frame to scalp gold for entries, you should, if you're looking to scalp gold, you should still look and do analysis from about at least the daily and the 4-hour time frame to understand what is happening from some type of higher time frame. Actually, first question is, what is your scalping range? Do you scale, like, what is your usual scalping take profit? 10 pips, 20 pips, 30 pips, 5 pips? First, let me know that. Yeah, I'm looking for a potential pullback to retest this bearish market structure, as we're more, like, we can see that sellers are continuously creating lows, pulling back to create lower highs, and then continuing down, right? So now, as we've had GJ sellers create a new low, I would like to see some of them close some of their seller order flow, which would in turn also give that pullback to 136. Get confirms of exhaustion via price action signals, and then take the sells down from 136 at least to these lows, and then down to 135.5 higher time frame key level, right? Similar to like what happened here. You could see GJ was melting quite impulsively, created this low by sellers, a base and support was created around 136.200 psychological price level. We had the pullback to almost 136.5, but this bearish structure and order block to the left, and then we had sells back down to those lows and new lows created here. So I'm looking for a repeat of this right here. You gotta visualize it like that. Okay, so if you're trading 10 pips, gold might be dangerous for you to scalp 10 pips. That's first advice right there. Gold can do a 10 pip 1 minute candle in like in 1 second. Not like gold, like for example, if you were in sells like over here, right? This candle alone is about 11 pips. And I'm guessing you're using a 1-to-1 risk versus reward, like you risk 10 pips to make 10 pips. Is that true, Sammy? Do you go for 1-to-1 scalps? Or do you risk like a 5 pip stop loss for a 10 pip gain? And plus you need good spread too for that, because like gold spread's probably gonna take away 2-3 pips of your profit. You're going, yeah, don't even scalp gold if you're going for 1-to-1s and you're trying to trade 10 pips. Don't do that. Just stick to the currency pairs. Don't even do that overall. Why are you risking one to make one? What's the benefit of that? You know what I mean? If someone came to you on the street, Sammy, and said, give me $100 and there's a 50% probability I'll give you your 100 back plus another 100, would you take that deal? Would you guys trust a random person and take that deal? Would anybody take that deal? If you had $100 in your pocket on the street and somebody said, because the market always has, you can't look at the plus sides in the market. You have to look at the market in a negative light. You have to look at the market like not in the sense that it's after you or the brokers are after you or you're getting stop hunted. You have to look at it in the sense that the market naturally, due to human greed, corruption, and power, the market targets human weaknesses and inefficiencies. Okay? So having a very small risk versus reward, you're already putting yourself at a disadvantage. To me, it is the exact same thing to me, going for a 1-to-1 risk versus reward in the financial markets is the exact same thing as what I just told you guys about that $100. It's no different than me going on the street and some guy saying, if you give me $100, there's a 50% chance I'll give you your 100 back and another 100 on top of that. I might as well give it to that guy. Okay? Because a lot of people seem to forget that having a high win rate in trading is not the goal. Anybody who tells you they have an 80%, 90% win rate, 95% win rate, they're fucking lying to you, and they're not telling you the reality of trading. The goal in trading is to take quality trades where you earn more than you risk. Otherwise, there's no fucking point to it. Right? When you earn more than you risk, even if it's a 1-to-2, it does not matter because then you can afford to take more losses. We are trading a financial market that is run by fucking machines. Run by supercomputers. Banks don't pay manual traders salaries anymore like it's the 1930s. All right? This is 2020. All right? Banks are paying billions of dollars for the fastest tech, the strongest tech, the lowest latency, the lowest ping, the fastest connection to servers, order flow execution, all of that. They're paying for the fastest, and they're not fastest, they're paying for the smartest developers, teams of smartest developers in system and guys who watch the systems. These guys get paid hundreds of thousands of dollars in salaries just to watch one algorithm, just to monitor one trading server. There's people in the banks, these banks that make billions a year, where their job is that every single day, 9 to 5. Okay? The market is made up of machines. It's made up of supercomputers. The reason when you close your order, you can exit the market so fast is because there's a computer on the other side to pick up that order. Without buyers and sellers, the market would not exist. It's just in our modern era, that execution, that reaction, that transaction is instantaneous. It happens within milliseconds, faster than milliseconds. because of all this liquidity being automatically traded every single minute, every single second by banks around the fucking world. And these banks, they're not targeting us dumbasses. They're targeting each other. You really think retail liquidity in the market fucking probably makes up maybe 5% of the market? Maybe less. It's all the corporations, the banks, the governments, the central banks. It's that money. It's the 1% money that's moving the market, right? And because the market is one made by humans, extremely greedy and corrupt humans, it literally targets human weaknesses and inefficiencies, right? That is why it is so common between everyone that 99% of retail traders lose. It is because due to a lack of knowledge, most people don't even want to look at the fundamentals or start studying fundamentals. How are you trading financial markets, but you don't even know what an interest rate is? Come on. It makes no sense. Right? These people who trade only technicals, it's fine. If you can find a technical strategy where you can have great risk versus reward and you stick to your discipline, I'm not saying that just trading technicals alone is not efficient or it cannot lead to success. But if you were, let's just say you were a soccer player, you were a professional soccer player, football player in Europe, however you guys want to say it, right? Let's just say you were professional. You want to be professional. Would you only train your one foot? Or would you only learn one aspect of playing football or soccer? Or would you want to learn everything about the sport you can? If you want to be the top performing athlete in a specific sport, would you limit yourself to only using one hand or one foot? Or not learning everything you can about the sport, the strategy behind the sport? Would you not want to learn everything? Right? Why put yourself at a disadvantage? If you are trading, if you are a chef, if you want to be a professional chef, would you only learn how to make one dish and that's it? That's all you can do? Only learn how you can only cook one dish? Or would you try to be an expert as many types of food as you can through your career as a chef? These markets you trade, these currency pairs you trade, this is real world money. Okay? You want to have a real world example? When the stock market crashed and the technical dickhead traders saw this meltdown and said, wow, what a bearish structure trend, whatever they saw. When this sell-off happened in the US stock market, millions and coronavirus caused this, millions of people in real life, I know behind the screens we forget about real life, millions of people in real life lost their jobs. If Brexit, this negative mystery, actually leads to worse infrastructure for Euro and UK, and there's no trade deals and they go down a bad path, dozens of thousands of people in the UK will lose their jobs who have anything related to import and export with the European Union. You know how many jobs are related to import and export? People don't think about this shit. You know how deep and vast these financial markets are, from actual trading to bank contracts with each other, to real world physical trading of goods, import and export, to real world economic performance of countries. Why do you think these central banks cut interest rates and that has an impact on the charts? It's for a real economic fundamental reason. They cut interest rates like when global markets crashed. All these central banks that give out loans to countries, they cut their interest rates to zero to promote more lending and spending by the banks and to trickle down the line to the consumers to promote economic stimulus. right? To stimulate the economy. Why do you think they call it stimulus? It's meant to stimulate the economy during times of economic distress or uncertainty. They come in with their manual power of being able to print as much money as possible, or do QE, or do whatever tools they have, cutting interest rates, to help stimulate economy until people do have jobs again, until they can go back to work, and until economies start moving on their own. Then they will increase the interest rates. These real world fundamental events have huge impact on these technical charts. The money being moved from hand to hand, the financial trading by banks, the real world impact on economies, the fundamental events, whether it's social, geopolitical, whether it's physical war, it doesn't matter, whether it's this pandemic. All this information together in tangent with investor behavior is what prints these charts. We are just blessed with modern technology that we can watch charts on the 1 minute chart. We can look at 60 seconds of price data being printed like that. We're just blessed to have that. Back in the day, 100 years ago, don't quote me on that one. You can quote me on everything else, but don't quote me on the 100 years ago. I don't know if it was 100 years ago when chartists, when economists and chartists at the time, it was a profession. They would be manually jotting the different price points of gold day by day based on the fluctuations of gold supply and demand, and actual real world trading of it. And then after 3 months or after a month of plotting, you have a line developed. You have a trend. You say, oh shit, gold's been going up. That's how these charts were developed at the core, from the real world movement of economies, supply and demand of goods, whatever it may be. That prints these technical charts. So how can people just study technicals? It makes no sense. How can a mentor tell you to ignore fundamentals? Right? It makes no sense. That's like me telling someone who wants to be a professional basketball player, ignore using your left, only dribble with your right hand. That's your dominant hand. That's the hand you feel safe with. That's the hand you're comfortable with. All right, only use that. We're going to tie your other hand behind your back. You're probably not going to get that far on your professional basketball career, are you? Right? Similar thing with fundamental knowledge of the markets. It's endless. Technicals are fucking easy. Technicals in identifying lows and highs, identifying trends is easy, but having the fundamental confluences behind it of understanding why moves are happening, that's what increases your confidence alongside the technicals, and you know what's happening and why it's happening to some extent. Yes, the markets are heavily manipulated, and they're not manipulated in the sense that you are being targeted, like individually. They're manipulated in the sense that end of the day, the markets are being run and created by greedy ass, dumbass humans just like us, right? Corrupt, evil, dumbass humans who have their own agendas and who have a lot more buying power and overall global power than we do. You know what I'm saying? So when you understand the market fundamentals from a macro perspective, and when you understand the day-to-day fundamentals such as market sentiment or looking at Brexit headlines, and we understood why GJ took this fall because of those negative comments from the Bank of England, because of the Brexit negative headlines, because of overall market fear developing. The reason for this break of technical structure and the break of this bullish trend line was for those fundamental reasons. There was a catalyst behind that, right? And you can dive into learning about a specific country or currency pair or commodity or precious metal for forever. Holy shit. Like, I don't know shit about shit, and everybody thinks I know shit, and I feel like I don't know. There's still so much I haven't learned yet, and there's still so much I can sharpen my experience on or develop my skill set around or learn more about, right? And better use that information to my advantage, because the more chart hours you develop, the more experience you develop. Even if you've gone through a trading career where you've crashed a lot of accounts or you've lost, If you are actually putting effort into back testing and improving on your losses and learning about the economic side of the market and improving your technical skill set, as well as staying actively involved with your mental growth too, there's no way you won't see success at one point. And you have to understand, social media and just our overall societies, people always want what is easy, what is safe, and what is convenient. In trading, this has like for example, in your day-to-day life, you can see this with the food you get advertised, with how everything is set up in our life. It's all meant for ease and convenience. It's all meant so people can take the path of least resistance. They don't have to think too much. You don't have to do fucking anything to get anything nowadays, right? Like I'm talking about just basic food, all that stuff. Okay? Trading is a similar way, where people want to earn hundreds of thousands of dollars in the market, millions of dollars in the market, but they're not willing to put in the time and effort of understanding it could take years to get to that point of even having the knowledge to start developing your money to that point. Right? But what is advertised in trading when you go on social media? What is advertised? Scalping, signals, account management, very fast, impulsive money. Follow my signals and you can make so much. But follow this algo. Come invest with my broker. Come invest here. Come give me more money and I'll flip it for you 10 times over again. Everything that is fast, impulsive, or considered easy and convenient is what is advertised in social media for trading. And all of that stuff only leads to long-term trading failure. Right? I can show you guys this. I always show my chat. This is, you guys can see the screen. You guys see this behavioral finance. This is from Vanguard Financial Institution. Understanding how the mind can help or hinder, how the mind can help you, or how the mind can decrease your investment success. Vikram, we don't worry about that because we got a news bot. So like, or if you have a news terminal, we get news headlines up to the minute. Like if I just close out of this right now, we have this news. If you see this newsroom here, if you see the times next to these news headlines, not every single headline is relevant, but whenever there's a significant high impact headline, we'll get it within 60 seconds. Like right now, you just saw 10 headlines coming in at 4 a.m. Are they significant? No, but it's information, right? But we did see, we've seen a lot of headlines right off the bat. Like for example, when Trump got COVID, or some of these negative Brexit headlines during the day today. We've seen a lot come with very quick reactions from the newsroom. But anyways, what was I doing? Okay, so you guys see this. Let's look at this for now, and then I'll go back. You paid $1,000 for a 3-day course on technicals? Oh my god, man. Capital Hungry is cheap for you then. But anyways, you guys see this? Do you guys see this? For investment professionals only, not for retail investors. This is what Vanguard usually gives their employees on the investment side, whether they're investing in pensions, stock market, equities, currencies, doesn't matter, okay? Oh, gold's back to 1897. Let's watch if it breaks above 1898 for buys in this new hour. Watch that. But yeah, read this quickly. Okay? The behavioral biases discussed in this guide are ingrained aspects of human decision-making processes. This means a lot of these are natural human-making decision processes that we have just been grown into based on our system, education, lifestyle, whatever it may be, okay? Behavioral finance is the study of psychology on financial decision making. All of you in the chat know this is probably one of the most important things that you could ever master. So if you can master your emotions, the rest is easy. We all get that, right? We can all agree on that. The hardest part of trading is your own personal self-growth and defeating your own bad habits outside of trading, whether you're too aggressive, whether you're impulsive, whether you're addictive, a gambler, whatever negative habits you have outside of your trading, they're going to be amplified times 100 in trading, because in trading you're dealing with money. And nothing impacts our emotions in life more than money. We go to school for it, we work for it, we pay our bills, we pay everything. Taxes, doesn't matter. You can't live without money. So there's nothing that brings you more stress or potential freedom than money. So behavioral finance, think about your emotions when you're trading that dollar. 10 times, 100 times more amplified. Both sides of the spectrum. When you take a winning trade, you are extremely happy when you make money. You get that adrenaline rush, that dopamine dose, you just made some dollars, whatever it may be. This is all behavioral finance, okay? But anyways, it talks about everything. Overconfidence, how it can impact your investing behavior. Look at this. 20% of the least active traders. The quote active trader, or the term active trader, means how long you are actually active in trades in the market or looking for trades. This does not include your time when you are studying. Studying is like when you are a professional athlete, like you're an NBA player. When you are studying the markets, when you are backtesting, this is like when the NBA player is going to practice, or they're going to do a workout, or they're going to get a meal to further benefit their nutrition. When they're doing all the stuff nobody sees behind the scenes. Are professional athletes getting paid by the hour? Do they get paid on a 9 to 5? I like to use them as an example because trading is very similar. No, they don't. They get paid for what? Their excellence in their skill set. Not even just their skill set. They get paid for their excellence in their skill set. Right? They'll be, most of the week and month, they'll be practicing, working out, resting, eating, rinse and repeat that, to then display their skill set on a stage where they will finally get recognition or get paid. They're not always in the game. They're not always competitively playing in the game. Trading is no different. The more time you spend actively trading, the higher potential you have of losing, the higher probability you actually have of losing over time. This is what it's called: over trading, over leveraging, revenge trading, right? Over a study of actual financial institutional traders, from a period where you see the 20% most active traders, on a monthly basis, they had extremely strong portfolio gains, over 20% gains a month. But they could not sustain this over an extended year. By the end of the year, the person who was less active in the market but more selective with their trades had an annual portfolio return of 20 or 18.5%. Understand, this is on millions of dollars because this is coming from a financial institution. So that 20% is actually a lot, right? We could do far more as individual retail traders. But look, by the end of the year, the 20% most active trader, yes, he made gains, but it's almost half of what the least active trader made. And the least active trader dealt with a lot less stress as well. Because the longer you are involved actively trading and looking for trades, the more you start to lose your energy, you lose your focus, you start to get confused about your bias, you start to get emotional, tired. All these human errors and inefficiencies come out. We are not robots. We cannot stay focused for 10 hours every single day staring at the markets. For example, these athletes who are at peak physical condition, could LeBron James play for the same consistency if he played 10 games in a row back to back to back every single day? Would he be as good or as efficient on day 1 as he is on day 10 if he's playing every single day? I'm talking about full 40-minute games. He's on the court every single day, no breaks in between. He's probably going to start to decline on his physical energy, on his focus. His skill set will not shine as well as it was if he was well rested. That was a fucking tongue twister to say. But you get what I'm saying? I say this to my chat all the time. When the professional chef, are they always constantly making professional dishes? Or are they doing a ton of prep work, cleaning up, doing ordering their inventory, sourcing where the food is going to come from? All the work for this excellent skill set happens behind the scenes. Trading is no different. You have to spend 10 times more time and effort into the studying of the financial markets, into backtesting your strategy, into focusing on mental and emotional growth, and less time actually trading. I know this sounds crazy, but it will lead to long-term success. Especially in the market. In the market, you are up against a beast where the odds are against you, right? The odds are against you. You have less power than what you're going up against. And there's so many uncontrollable factors in the market, from fundamental aspects, like, for example, you could be in a trade and everything looks great, and then a headline comes out, and if you're not aware, this is something that's out of your control. Just overall, there's dozens of, tens of, hundreds of things in the market that are out of your control. And humans are creatures that crave control. Humans need control to feel safe, to have that certainty, right? So the more you can control in your trading, the better. The more rules you have around your trading, the more discipline, when you control when you trade, why you trade, how you trade, the rules to your trades, the better, okay? So just understand that. All right, gold. We are only taking buys on gold if we break above 1898. We're going to take that buy squeeze up. Otherwise, we are not playing those buys. We're still rejecting 1897 on this new hour on the dot. GJ, we're getting our pullback. We're looking for this new hour to retest around 136, even around 136.100, and then take those sells down to these previous lows. Again, we're looking for a repeat of this seller structure as we had lows printed, a pullback to structure, revisit those lows, and then came down to new lows. Well, if we get those entries at 136 in exhaustion or rejection, we can at least take that squeeze down to 0.700 previous lows, as well as 135.500 flat as well. All right, but let's just watch that structure accordingly. We would only take buys on GJ if we broke above 136. If we come to 136 here, fail to break above, and come back to like 135.8, double bottom on the 1 minute showing sellers exhaustion, and then break above 136 and this bearish structure, I could see a potential for that deeper pullback, only because we're coming close to the 4-hour close in the next 50 minutes, which is also Asian market close. So usually the new 4-hour candles are known for giving deeper pullbacks, as usually the 4-hour candles are usually lined up with a session close or open. Not all the time, but in this case it does. And by pre-New York, it would be ideal to get better sell entries too. But that's what we're watching on GJ. On gold, we're only taking buys above 98. You can see price is just playing in this 30 to 40 pip range, but still below our key level. And the US dollar, the US dollar broke back below, actually ended up closing below structure. So still, some of that US dollar strength is getting faded out. If we can see the US dollar come down and gold go above 98, we're taking that buy squeeze up. We have the director for financial markets in the Bank of England speaking right now as well. So he might, if he says any comments that can bring some neutral or positive bias to GBP, it could give us that better potential for that pullback. EURUSD didn't give us the safer sells below 1.72. USDCAD has just been in this ugly range. We stayed above us. We stayed away from it. Dow didn't do much over London either as well. The only real London was pretty trash again though, eh? The only move was the GJ sells from 136 down, and then the gold sells down, but then it instantly got corrected too. Nothing too crazy this London session so far. Mac, can I label what? CD? CDES? If you guys like these live streams, I can do them once a week on YouTube. Maybe more, depending on the feedback. Depends on the feedback, of course. I don't have a brother. I have a sister. Santiago, maybe Baby Pips, babypips.com. In Capital Hungry, I don't have a specific course. I have these personal 40 webinars. Oh, sorry, Fahad. If we see continued US dollar strength and getting waved off, where would you take sales? I'd take sales below 97 again. Same price. If we see the US dollar continue bullish, I would take sales at this exact same price still where we were looking for sales previously. Pretty much here. Right? So for the Capital Hungry private members, I don't have a specific course, but I have these 40 plus educational webinars on technical and fundamental topics. And these can go anywhere from like 1 hour or like 20 minutes to a couple hours long. So this is what, when people first join Capital Hungry, you get a manual to watch all these webinars first and take notes so you can understand the fundamental and technical concepts. But what Capital Hungry actually is every week we do market recap webinars, analysis. Like I swear I'm getting deja vu because I said this in the last live stream. But every single week in Capital Hungry, we follow this same systematic approach. So we start the week with a mental reminder and psychology reminders, right? Like to all your mental reminders, psychology reminders, your compound. Oh, sorry, USDCAD buys. One sec, I'll check that in a sec. To pre-plan your trades, to execute as per your plan, to journal the result, right? Then we recap a psychology webinar, which is all the webinars are on Vimeo, because the psychology is the most important part of trading. Oh, is there more than 40 webinars? I don't know, man. I just make the content. Okay, the members are saying there's more than 40 educational webinars now. I don't think there is actually. I was just doing a quick ballpark. But then we review one of the psychology webinars because the mental and psychology side of trading is the most important. Then we do a weekly recap and refresher webinar, which can be anywhere from like 10 to 30 minutes long, where we recap and review last week's analysis and what fundamental events took place last week, right? Then we send this economic calendar and notable events report. Right? Oh, with all the videos in Capital Hungry, there's like yeah, over 250. Right? Then after that, you get some of these secret reports that tells you about all the political speakers throughout the day. It's not really a secret, but you guys probably can't find it online. Then you get a news briefing of some of the main headlines that had market impact over the weekend. All this is still Sunday. This is just information on Sunday. So you get your mental, this is all October 11th. Your mental reminders, your psychology webinar, your weekly recap, your economic events, your political speakers, your news events, your market sentiment read, looking at investor behavior from US dollar, Japanese yen, volatility index. Then we do a market update webinar or analysis on the pairs, right? Where this is a market update webinar looking for trades on gold, GJ, Euro USD, and USD CAD. And then this process is followed every single week. Like this was the week before. Every single week. Every single week. We don't stop. We never stop. Holy shit, we never stopped. This is pretty sick. I haven't done this in a while. Every single week. Yeah. Every single week for over a year. Yeah. Damn. Wow. Holy shit. Yeah, but yeah, you get the idea. We follow that same systematic approach with the mentor reminders, the analysis, what we're looking for every single week, right? That's the main feed. Then throughout the week, you have the Capital Hungry Trade Room. You have other members sharing analysis, like Alex, for example. You have Capital Hungry session alerts. This is old, sorry. You have key level price alerts that get automatically sent to the channel. We do polls. We send market updates, you know what I mean? In the trade room as well. Other members share their news headlines or trade ideas as well. What is this? Oh yeah, I'm doing this educational webinar for the chat today. Then you also get access to the Capital Hungry newsroom, which is real streaming headlines every minute. And you also get access to the banter chat, where we just fuck about, say funny things. But yeah, every single week, the chat will tell you. So actually, I was underselling it. There's more than 40 webinars. The main educational one, there's about 40 plus. There's 287 total videos of market analysis, webinars, price action sessions. Oh yeah, we do these sessions like anywhere from 1 to 3 times a week. Holy shit, Capital Hungry does. We do a lot of work, eh? Okay, let's see if gold breaks above 98. I was just looking at this price, waiting for that break above. And then looks like US dollar is turning a bit bearish here, remaining below the bearish market structure. That hourly candle, sorry, on the dollar flipped real quick. Like with that 1 second we weren't looking at it, it flipped back bearish. If the US dollar can come back down to test 93.5 and break that, we can get that gold buy squeeze above 98. All right? I should do regular streams. Okay, then we need to get. I need more subscribers then. Then no problem. I got you guys. I'm gonna fill my water bottle though. Oh, sorry, Sammy. I didn't see your question. You sent it above too, right? About the 1 to 2 and 1 to 3 RR. Price moves 10 pips your way. At what point should I move to break even? Sammy, if you click my YouTube, oh yeah, by the way, for you guys, for the people that don't want to join Capital Hungry, because Capital Hungry, what I just showed you guys, honestly, is not for beginner traders. I do not want any of you new fuckers in Capital Hungry, because you guys are super annoying and shit. All right, but if you guys have some experience, if you want to learn more about the fundamentals and you want to be a part of the community, then join Capital Hungry if you're willing to put the time and effort in to follow along the analysis and all that, right? Otherwise, this is my free YouTube. Sammy, if you watch the Scalping 101 webinar, Scalping 101 series, 101 part 1 to part 4, which is uploaded recently, it'll talk a lot about that. But because that question is not something that has a static answer. You can't just say every 10 pips you said I'd break even, because it's something that depends on live price action and market structure. You know what I mean? Yeah, we don't want any noobs in the chat, because you guys ask too many stupid questions and shit. No, I'm kidding. I'm not kidding. I'm honestly not kidding. I'm just trying not to be rude to, like, so you guys don't feel intimidated by trying to learn more. But there's enough free resources on my YouTube where, like, you can learn a lot about, like, look at this. Which one of your mentors has a full timeline of GJ from 2007 to a 2020 breakdown? Huh? Nobody. Lucas, we in Capital Hungry are advanced. We don't lose. Lucas, you can't even type. What's loose? I hate people who type lose as loose. Major pet peeve. GJ, we're still waiting for the pullback to around 136, as this is looking like more corrective action so far for a pullback to the upside. What lot size did I start with? Penny lots. Here. You guys can come join this free chat. First post. So I started this whole fundamental and analysis journey like in a free analysis chat. There's like 3,000 subscribers in there, but I started just like everybody else. 0.10s, 0.0s, 0.01s, 0.05, 1.5s. This is when gold, man, this is when gold was at 1,300. I could have made more money taking one lot buy at 1,300 and going to sleep for 6 months. Straight up. Could have took a buy on gold and just went hibernated like a bear. Just come out for this winter. Not even know what happened. But yeah, I started with the 0.1s. I don't know why people are ashamed to show their lots or show their growth. Just because somebody, for example, like if I showed you guys that Dow Jones trade and I used the 10 lot, it doesn't mean anything to you guys. Just because somebody uses bigger lots or has a bigger count does not make them a better trader or worse trader than you. How do you know that person isn't already a millionaire outside of trading? How do you know they don't have 10 other streams of income? How do you know they didn't inherit $10 million and they're trading for fucking fun? How do you know, right? Me personally though, I came from not like a rich family or anything like that. I was always working a salary job. I always worked a job since I was young. So I started with a smaller accounts and smaller lots. But I know people who started out trading with $50,000 accounts and burned through them. But to them, losing $50,000 was like me losing $500. The relation of money is unique to every single individual is what I'm trying to say. You can't look at somebody else's lots or what they or the size of their accounts or what they started with without knowing their financial background, lifestyle, and history beforehand. But if you're asking me, I want to tell you ahead of time that I'm not somebody that was rich. I am not somebody that has millions of dollars or hundreds of thousands of dollars. I always started with smaller accounts and then I started with penny lots. All right. Paul hides his lot sizes. Paul trades FTMO demo and uses 60 lots to earn $200. It's just trash, you know? It just doesn't make sense. But yeah, you guys can go follow that stuff too if you want. But I'm going to keep it on the newsroom now just because we might get this squeeze on gold and this pullback on GJ. So I just want to watch that. But yeah, you guys have a bunch of resources. You do not have to go join... You don't have to join me. You don't have to go join any mentor, especially mentors that are teaching you just technicals. If you like the person, if you like the way they teach and they bring you value and they put effort and you get value for what you paid, then by all means, I can't say shit, right? But there's about 1,000 mentors and services out there where people pay and you either get a cookie cutter course that doesn't teach you shit, or you get tossed into a group with all the other people who paid and didn't get shit and who are just stuck in this group conversing with each other about the same Fibonacci retracement setup. If you are stuck in that situation, take yourself out of it. It's better to be alone and go study alone or join an actual group that will bring you some value or just, you know what I mean? There's a lot of resources out there. You can go to my YouTube free channel. You can go to the free Telegram. After you do all that, if you feel like you're up to the challenge of capital hungry, that's your choice. The same trade ideas still stand for what we're looking for. We got, just to summarize, we got that, I didn't get it, but you guys in the chat got that initial sell squeeze from 96 down to 93. You could have secured anywhere from 10 to 40 pips. Of course, we reacted at those previous 1 minute lows. I am not looking to scalp, but this would be a nice intraday setup for me as well. That 40 to 50 pips I would take. So I'm gonna keep watching that. But obviously we need, for that upside on gold, we need the US dollar to respect this bear structure and continue bearish. That would give us that inverse correlation to for gold to continue bullish, and especially if we break above these 1 minute highs. GJ, we are getting our pullback. I'm waiting for a retest of this structure. What time is it? 30-minute candle closing right now. If this next 30 can make its top wick first and generate that order flow and liquidity, we will take those sells down. Otherwise, we're only taking buys above 136.2, break and retest, with confirms of sellers exhaustion for that deeper pullback for the new 4 hour for that 30 pip squeeze to 0.500. So watch that. I really need a drink and to get some food. Gold, watch that. EU is just in this range on the lower time frame as the US dollar snapped in and out of that bullish pressure very fast. But it looks like if the dollar continues bearish now and remains below this structure, as we had a very weak bullish candle close in that wick created, and breaks below this support, it does give us more confluence for those gold buys, which we could possibly see right now but to pop up, and EURUSD to give us that deeper retest, that 20 pip squeeze up to 1.77 we were looking for at the start of the webinar. So we might get that pullback squeeze as well, and watch the reactions there. UCAD is just messy. Possible sells below 1.31200 still. And this is the GJ pullback as well. But yeah, I'll be back in 1 second. Over the washroom. Krish is waking up behind me. Oh man. No homo, my mouth starts to hurt. Shit. I'm talking a lot. What time is it? I'm talking about like 3 hours. The other streamers take too many breaks. No, I'm kidding. Sorry, let me just quickly check the private chat as well as 18 messages. That's a nice little 10 pip squeeze. Gold up. Yeah, no noobs in the private chat. That's just too annoying. It's not worth the headache. Okay, so no. Okay, would you take buys above? Yes, I'll only take buys above 1.316. Yes, sells below 1.320. Even below 1.320. Safer would be below the low, down to 1.306. But yeah. GJ, watch EU as well. Okay, nothing else there. Any questions in the YouTube chat? Yes, I started with penny lots. I don't know why people are ashamed of that. Historical key levels are more important than recent support and resistance. Sandeep, support and resistance are created at historical key levels. Support and resistance is something that is created reactively during live price action. Most likely it's already being created at higher time frame key levels. For example, let's go look at, so these higher time frame key levels on gold, for example, right? Like 1929, or if you want to call this support at 1883, this support in real time was being created at this higher time frame key level, right? These higher time frame key levels were already being identified based on those candle body conjunction points. Only thing guys, watch out about gold, there's no lower wick here, but it'd be nice to get that squeeze to 1902 and then melt. But be very cautious about that no lower wick. So if you got those buy entries, just watch price action accordingly, because we still have what, another 27 minutes until it closes. But still, 20 pips on gold. Let me get a fucking W in the chat. No. That's a nice squeeze up. And you guys catch that in the chat quick time? We're waiting for that 1898. I can't speak. I gotta go to the washroom, man. Fuck this. I'll be back. 1897.5. Yeah, just secure 20 pips, leave a runner. GJ, we're also watching the reactions, or even if it pokes up a bit right to the bear structure. No, we weren't looking for a break and retest here. We were just looking for the break entry at 98. After this many failures to break above it, it would just do a cleaner break, just for that scalp squeeze. If we go to 1902, that's blessed, that extra 20 pips. But even from this area here up is still about 21 pips. Just watch as the hourly does not have a lower wick, okay? So just be cautious of that. But that's nice so far, finally. GJ, we're waiting for the potential sells at the retest of structure. We would only take buys at GJ. We would need the break, then the retest buys at 136.2 to take buys. Isn't it better for a break and retest on gold before the big move up? Yeah, but this isn't like, for honestly, for gold, 50 pips is not a big move. Even 40 pips to 50 pips on gold is not a big move, you know? It doesn't mean anything. It just, usually intraday candles do have a higher probability of creating wicks on both sides rather than not creating wicks. It's not something that's 100% fact or has some real world reasoning behind it. It's just something I've noticed personally over a few years of trading, that intraday candles, or the higher the time frame the candle, the higher probability it has of making both a bottom and an upper wick. I'm not saying we have to, but I'm just saying that's something to watch out for. Isn't it better for a break? Oh no, I just checked that. Why the break and retest on GJ? I'm saying to take buys, we would need the break above this price sensitivity area at 0.200, and then the retest, and to catch the retest, and like we could potentially shift into bullish structure like that, right? Otherwise, if we reject and come back below bear structure, we're taking the sells below 136 down. Sorry, from the trend line down, right? But the only reason I'm saying right now we could possibly get that deeper pullback and break and retest above 136.2 is just because we're coming towards Asian session close, and we're starting to come towards a bit like London's already been open for 2 hours once Asian session is closed, and you're coming to pre-New York. You usually do see larger pullbacks from Asian session close to pre-New York to set up the New York move. And GJ, even if it pulls up to 136.5, is still extremely bearish. We have just been following and playing along this lower time frame bearish market structure as we've seen strong reactions there, right? Yeah. Okay, so yeah, I'm just gonna grab a snack. But that was a nice, for a scalp, that was a nice squeeze. It took a while though. The sell was a lot cleaner with the break and retest, and it melted for that 30-40 pips, but that was still a nice scalp squeeze of exactly what we were looking for. Once we had that break right at 98, that would have been a better buy stop if I was going to use a buy stop entry. I personally usually stay in a trade until either my stop loss or TP is hit, and I personally go for 1 to 3 or 1 to 4 risk versus reward trades, which usually is around a 15 to 20 pip stop loss risk depending on market structure as well and price action. If I can have a tighter stop depending on price action or momentum and volumes, I will. If I can move a break even faster, I will, just to protect capital. And then usually it means a 60 to 80 pip take profit gain. But yeah, just watch out as that. Just watch out as for that hourly no lower wick. It potentially for the next hour, for the 4-hour candle, if we could get a retest at 97 and then continuation at 92, that'd be also another clean setup to look out for. What broker would I recommend? Well, a lot of the Canadian brokers that offer they're not Canadian brokers. A lot of the brokers that offer Canadian clients 1 to 500 leverage, 1 to 500 leverage, they are now being removed out of Canada and specifically not supporting Ontario residents. That's the province I live, due to Ontario Security Commission's regulations changing, that leverage is way too much to offer, right? And for other reasons as well. So I used to use, or I still right now until November 31st anyways, when Vantage stops supporting Canadian clients, I use Vantage, but I'm going to be switching to a regulated broker in Canada called Owanda, where I'm only going to have 1 to 50 leverage. So I'm going to have to go back to using smaller lots anyways and back to that slow grind, which is all good for me because it is a regulated broker. And it is all 100% legal in Canada as per taxes and claiming it and all that stuff, where if I try to find another broker that's offshore, it might get me into some troubles when I'm trying to file taxes at the end of the year, right? Especially now that Ontario and Canada's regulations have changed. But if you're like in the UK, if you're in Europe, or if you're in Asia, you guys got plenty of options for 1 to 500 leverage, or brokers like IC Markets or Vantage Markets. You guys have a lot of those options, you know. I would say any broker you recommend depends on your country, and if it's regulated for your country's rules, then it's all good. Yeah. I just don't want to, just because I guess I could find another offshore broker that still hasn't changed the regulations and is offering Canadian citizens and clients 1 to 500 leverage, but how long is that really going to last before they change their rules too? Because this isn't something that was new. Before IC Markets, when I first started trading, IC Markets used to support Canadian citizens and clients, but then they changed their rules for that same reason, and that was like 2 years ago. And now 2 years later, Vantage is going down that same route, that they can no longer support Canadian clients due to Canadian specific regulations. And so most likely other brokers, offshore brokers, will follow that same path, and Canada will only be left with the options of those 1 to 50 leverage regulated brokers like Owanda, right? So I might as well start using that as fast as I can. Exactly. Yeah, exactly. Vantage should support US clients. Obviously I wouldn't know because I've never had to apply for a US account, but I wouldn't see why not. Vantage is a broker based in Australia. IC Markets, I think, is in the UK, if I'm not mistaken, or Europe. Usually the UK brokers are based in like the Cayman Islands anyways. But yeah. I'll be back, alright? I'll be back in about 5 to 10 minutes. I'm just going to grab a snack. IC Markets is also Australia based. Oh shit, yeah. So it looks like all those Australian brokers stop supporting Canadian clients for those regulation rules. But yeah, if you guys enjoy these streams, if you like these streams, if you like the banter, the analysis, the trade ideas, the fundamentals and technicals, then please like and subscribe, share it around with other traders, you know what I mean? It's not like it hurts, it's free. You also have all the webinars on my actual YouTube channel, so you guys can learn how to do analysis, how to observe price action, the lower time frame, different scalping techniques, different fundamental concepts as well. And if you want more, if you want to be involved in all that I was showing you here in Capital Hungry every single week, these webinars we do multiple times a week, or all these updates, I already showed you guys all those webinars, then you can join Capital Hungry. And you can go to capitalhungry.com, but that is up to you. Not too many news headlines so far. GJ coming up to that trend line pretty much and giving some rejections. If we come below 136 for those sells. EU, those buys are probably still running for you people. Or sorry, gold. Would have been ideal if we got a break below 28,600, but it I've never done binary options. I don't see binary options as like an area you could still put probability in your favors. When you're trading currencies, or you're trading something like gold or a commodity like oil, or an entire stock index like Dow Jones, there's a lot of different technical and fundamental confirms that you can observe and line up that can help put probability in your favor, right? I don't see those options on with binary. What time frame do I jump in a trade? I execute my trades on entries on the 1 minute chart based on higher time frame key levels in intraday market structure and price action. But I enter on the 1 minute because you can observe price action and reactions of price the fastest there. Buyers and sellers strength, exhaustion, etc., etc. Okay, I'll be back. When should I do the next stream? Next week? This week? Friday or something? No. Oh, sorry, I wasn't asking you guys in the YouTube chat. I was asking the private chat for for the YouTube stream. You guys can get it next week, Wednesday again. Next week this time. I was asking about I was asking my private members. Sorry about that, guys. I was asking these guys. Yeah, what's the date today? Wednesday, right? So tomorrow, we'll do tomorrow, London. YouTube channel's getting comfortable, eh? Fucking guys, that every day. Every day I wouldn't mind. Buddy, shut up. I'm a intraday trader. No, don't worry about the YouTube streams. I'll do that once a week still. I'll still hook you guys up with these YouTube streams once a week, maybe twice a week. Don't worry about that. You are just equipped with a lot of information. Trust me. And you can also be equipped with a lot of information. I don't have Instagram anymore. I used to have an Instagram with like 15K followers, or 15K or 20K followers, but I deleted it. I only got a Twitter where I post headlines. Oh yeah, I forgot about this too. I post like news headlines and stuff. If you guys want, like, I post news headlines, webinars, and stuff on my Twitter too. If I'm not wrong, someone is mimicking me. Maybe while I've been gone, they've been trying to mimic me. I don't know. No, but yeah, I only have the Twitter. I got off IG because there was too much drama with all these fucking marketers and shit. You know, I was tired of seeing these bald-headed Daniel Savages fucking win their Lambo from Raul's fucking celebrity dentist dad. You know, and now they're opening like a broker doing an algo. I was just tired of seeing shit like that. I was tired of seeing guys like Protein Paul who trade FTMO demo. I was tired of seeing fucking 20-year-old hairline receding Daniel Savages. I was tired of seeing alien built Sean Lees. I was just tired of it all. So then I deleted that. But Capital Hungry loved it because I was just putting we got more work in Capital Hungry. Yeah, I was just tired of those clowns. I was tired of all of them. You know what I mean? All the same marketers showing the same Lambos, showing the same Gucci bags, who have no knowledge, who don't actually help anybody make any money. You could go to like that one Switch trader, that girl Ninel. You could go to Sean Lee's profile. You could go to Daniel Savage's profile. You could go to Lambo Raul's profile. Q Bank's profile, and if you cover all their faces, you would not be able to tell which profile is whose. It's just all fucking the same cars. That's it. If you cover their faces in all those profiles, you would not even be able to tell who is who. Zero information, zero value shared, just always something new to sell with like signals or some new cookie cutter course or some new in-person course or some new broker or some new algo or some new account management, but never like, hey, this is how we trade, this is some information, this is what's going on in the markets and why. You know what I mean? Oh, I reacted to the structural line on the dot like we expected. We did not get the break above. It looks like that was a nice retest. Gold's still going. You guys keep asking me questions as I'm trying to walk away. Ted? Yeah, I originally started learning about Forex under Ted and the Forex family in 2017, but after like just being like Forex family was 50-50. They didn't really focus too much on the fundamentals and stuff like that. So after about 6 months or so, I was still a part of the community. I still always talk to Rakeel guys, talk to Ted guys, Monty, Seed. Like I talk to all these people, and like we share information and all that. But I just went to do my own thing and back test fundamentals, back test economic events, economic impact, market sentiment, like how to find key levels. Where like I just started back testing and studying on my own after I got the first exposure. You know what I mean? Yeah, I'm tired of the Asian stream, the FTMO gang, telling people terrible information, getting thousands of views. Me and Wix don't lie. We're very good friends. I'm probably in some. If you go to Wix don't lie's profile and you zoom down where he has a picture at the club popping bottles, I'm in those pictures. I just got off IG. I used to have a lot of IG clout. I feel like an old man who retired off it. I used to have a lot of IG clout. I just got off. There's just there's just too much nonsense. Too many scammers. Too many hopeless people. Too many people trapped in the social media vicious cycle of just staring at other people's lives and then wasting their own time. You know. And I was just wasting too much time myself, like calling out all these scammers and shit. But it never ends. You know what I mean? It never ends. There's always gonna be another bald-headed Daniel Savage coming out. I went to eat. I could hear you from the kitchen. I am right now. I'm right now. I'm going to eat. Yeah, there was a point. No, there was just a point where I had like so many members in CH, so many members on so many members on like so many people on IG, subscribers in the free chat, all this different stuff, that it was just too much. You know what I mean? It was too many people messaging me. Okay, I could show you guys the screenshot. I could show you guys a screenshot. I used to get 1,000 notifications a day from Telegram, Telegram and IG. Right? If you guys want to make real change in your life, you have like, or if you really want to improve your trading, you have to change aspects in your real life, whether it be your sleep, your diet, your physical health. It's like, you would be surprised how changing some of these aspects in your real life can influence your trading, you know? What are my impacts? What is my view on protein? Paul's trash, 100%. Daniel Savage's algo is a martingale algo. If you look at it, it just, as price is dropping, it keeps taking buys and buys as it drops, looking for that pullback. It's a basic ass martingale algo where they're taking 3 to 5% on all initial deposits and 3% on trade. Like, they're not going to lose. Only people are going to lose their money. That's the sad thing. They aren't going to lose because they're playing with other people's money. They're already taking percents off that money, and then they're trading a martingale algo. Everyone else is going to lose when they keep taking gold buys, and gold ends up melting $40 or $50 in a day, and they still keep taking buys because this martingale algo is just supposed to do that, right? Monty's a chill guy, older guy, full-time trades. Nick Sean looks like he's doing chemo every day. No offense. Nick Sean's a little weird bald-headed dude. Nothing against bald-headed people. It just seems like, you know, they all got something in common. I'm just joking around. I'm going to be bald soon. I think my hair's starting to thin out from all the stress from trading. Monty said I'm more hands-on the charts. Everybody should be hands-on the charts, should you not? If you're trading or you're trying to give people information, should you not be hands-on the charts? No, I love Monty. I just joke around with him about his I know he takes long coffee breaks, doesn't he, on his stream? I know he leaves you guys hanging for a bit. He takes a long ass coffee break. My girlfriend's snoring behind me. God damn, sounds like a grizzly bear. Fuck. Sometimes makes you wonder, you know? Sometimes makes you think about it. No, I was kidding. My starting investment was maybe $500 to $1,000, but that was just what I initially started with. I probably, before I started getting profitable, I had a very, very high I'm a very addictive personality person. Like, I have a very addictive personality and like a very aggressive and impulsive personality. And I was always working, so I always had a salary coming in. Like, I used to work in the financial sector of banks, the financial tech sector, sorry, of some pretty big Canadian banks. And I always had money coming in. And I probably lost my first year of trading just through trial and error from following signals from like account managers, all this different shit. I probably lost about easily 15 to 30K my first year of just pure trial and error. And I also never traded demo, right? And then the following year after that, I didn't take a full year off. I took a couple of months off to actually go on my own and back test and study concepts, right? And then I still lost the first few months, probably like another 10K. But then the following 6 months after that is when I started putting everything together, when I started focusing more on the mental side of it and fixing up bad habits outside of trading. And then I started having profitable months where I was starting to earn, like for example, if you guys saw, like when I started Capital Hungry Analysis, where I was starting to earn like $500 to $1,000 a day. So after 2 months, I made back all of my losses. And then after that, I've been pretty profitable since. Like I full-time trade and just run Capital Hungry since then. So it probably took me to find consistency. And this isn't something to like you can compare to. Everybody's journey is different. You cannot compare it to mine because you have to understand. It took me about maybe a year and a half, 2 years to find consistency. But keep this in mind. At the financial tech job I worked for the Canadian bank, I was working 12-hour rotation shifts from either 7 a.m. to 7 p.m. for 2 weeks and 7 p.m. to 7 a.m. for 2 weeks. Sitting at a computer at a desk where once I got used to that job, right? There was only really about 3 hours of work I was doing out of 12-hour shifts. So yes, the shifts were long. Yes, rotating, going from nights to days sucked ass. But the blessed side of it was for 2 weeks, I got to watch like during the night shifts, I got to watch Asian market open from 7 p.m. I would watch Asian market open at 8 p.m. China markets open at 9. I would watch how Asian session runs. Then I would watch London session overnight while I'm working. And I got to watch New York open. I got to watch all 3 sessions while I was working my salary job. So I got blessed in that way. Yes, I still had to work. Yes, I had to commute an hour to my job. The good thing was it wasn't like a physical labor job where like I don't mind physical labor, but at least I could sit at a computer. And after a year of working this job, I had it down to like a recipe where everything I could finish as efficiently as possible. So about 8 out of 12-hour shifts would go to studying the markets at those times. And then when I'd flip from 7 a.m. to 7 p.m. on the day shifts, I would get to watch New York open, London close, and then Asian markets at night open up at least. Right? So my job did not help me become a profitable trader because they didn't teach me about trading in that job, but it did allow me to put the time and effort into this craft I wanted to learn about. I would spend hours at night just reading about interest rates or reading about a fundamental event like the 2008 market collapse or what happened during the Great Depression. And then it just never stopped, right? It just never stopped. No, I just learned myself. I just learned myself through that. Let's go to a question. Addictive personality? Yeah, trust me. You have to understand your personality. You have to understand if you are a very patient person and you struggle, there's 2 sides of the spectrum. It's either you're very aggressive, you're very impatient. Holy shit. What the fuck? Yo. And gold. What the fuck gold bounced up for? She just ripped it up fucking 80 pips. No reason. No, there's no news. No headline right now. Because Euro USD, USD CAD, dollar's turning bearish. Bro, look at that rejection too. What the hell? That's like a 10-second 50 pip rejection. That's just price setting up, honestly. That's just a price grab right there. That's that coming to the 4-hour. Yeah, because there's no headlines right now. There's no data report releases for UK. that was just a quick, that was just a that was that retest. That was literally that retest. Like, that was just a price grab. No way. That was insane. Yeah, I haven't seen that in a long time. I saw gold spike up, but then I saw GJ to go to like 130. I saw 136.8 almost on GJ. That was a savage rejection. What happened to the bear structure line? Yeah, there's no headlines about Brexit, nothing. This is honestly probably going to drop down like once it retests 136.5. And that was way too fast to take buys at 136.2. There was nothing you could do about that. That just went up 83 pips and then back down 50 pips in like 2 minutes. That was the 50% correction, you know? That was the 50% correction. Top wick for wait, oh! It's 5 a.m. It's a fucking Asian market close, man. I told you guys. That was a 4 a.m. top wick. Oh, okay, that makes sense. No, that makes sense. I was telling you guys. Okay, did you fuckers not hear me say that usually at Asian market close at 5 a.m. there's potential for a deeper pullback? That was 5 a.m. I wasn't even paying attention to the time because I kept talking. That was that was just Asian market closing. I've never seen it that impulsive and strong before. But that looked like that was a 4-hour candle grabbing liquidity at a 50% correction. Still a good retest up. 136.5. No, that happens a lot. Like look where the actual candles are closing. That was just an extremely aggressive pullback at Asian market close 5 a.m. Eastern. I thought we still had like 30 minutes left till Asian close. That's why. If you guys rewatch this breakdown before this happened, when we were looking at price here, I was saying that through London session, when you're coming towards Asian close in that 4-hour candle close in the new 4-hour, there's higher potential for that deeper pullback to set a price pre-New York and New York, right? So that was my fault, was that I was not paying attention to the time because I was about to go get food and I kept answering questions, right? But all this was that new 4-hour candle open to set up pre-New York, which also happens to be the Asian session market close. So that's why it was not a news headline, it was not an economic data report, and it's already simmered down a bit, right? Doesn't Asian session close with the open of London? No. But yeah, that's what I was trying to tell you guys, that for the new 4-hour, a deeper pullback to better sell areas for New York would make more sense. Of course, this was extremely impulsive, and this was something that we could not even enter on fast enough. I wasn't even looking at the GJ chart. I was just over here looking at the headlines. But yeah, it has nothing to do with Brexit. It has nothing to do with any economic data. That was just Asian session closing in the new 4-hour, that 4-hour candle closing and the new 4-hour candle open, where over that last like few minutes we can see the candle opened around 135.9, and then we had that spike up. It looks like, honestly, looks like New York will still continue down, and that was like a fucking bank price grab. And what, remember I was telling you guys about the psychological price levels? Where did it spike up to almost on the dot? Almost 0.800 on the dot. But honestly, for buy scalps right now, if we create a support here at 136.200, this is now starting to create some lower time frame bullish market structure and breaking above the bear structure and breaking above 0.200. So we could probably see it go to retest 136.5 again. You know what I mean? But that's only if it holds above 0.200. It does look like that was just that 4-hour retest, but extremely fast and impulsive. That was 80 pips in like 2 minutes. Dow Jones, I'm still in an overall bullish bias, yes. No, this pullback is probably just for pre-New York hours, and then it will continue down for New York, most likely to revisit these lows. It just made it, that's what I was talking about for that Asian session close, that new 4-hour pullback. But usually it's not that aggressive. Usually that pullback at the new 4-hour candle, we would see this rejection, price maybe break above the bear structure, then we could say it would slowly start creeping up from now to pre-New York till about 136.8, then sell off, right? This was right at Asian session close at that new 4-hour candle, extremely impulsive upside. This was the low created, and then it just flipped above the key level, and then nothing you could do about that. Obviously, when you're scalping, you're setting risk-free, you're having tight stops anyways, but that was not anything related to Brexit or UK economic data. That looked like to me some potential just price grab by banks. The only UK headline we got so far is like right now, intensive work can still yield the EU-UK trade deal, but nothing is impossible at this stage. But there is still some way to go, where this is just really a neutral statement. It's not really saying too much, you know? That was good to see on the 1 minute though. that was like, impulsive. I'm gonna keep this live stream going for like another 20-30 minutes, and then I'm gonna save it and end it as well, and we'll do another one shortly. But yeah, I was saying if we could get 100 view last live stream, we got like 100 viewers or 120 viewers. So if we can get 100 viewers again. Brexit, there is very little time, but deal is difficult but not impossible. Like, what the fuck does that mean? You guys see, this is the most recent headline as well. Brexit, there is very little time, the deal is very difficult but it's not impossible. Like, what is that? You know what I mean? But that was looking like how 0.200 get that squeeze we're talking about. No, these Brexit headlines are just coming out now. Like you can see this is a terminal. And these Brexit headlines also aren't positive. Like it says, time is running out. We are close for running out of time. You know what I'm saying? These headlines are now coming out, and they're not even that positive too. These are the last Brexit headlines: 5:10, 5:11, 5:11 in the morning. Yes, read. time is running out. We are close for running out of time. That in my opinion was just the Asian session close and setting up better price for sells for the banks for pre-New York hours and for New York session, because these headlines, not with every Brexit news, GBP does not go bullish. That is false, Mr. Targus. Because if that was the case, then what caused this sell-off today? If that was the case, then what caused this sell-off of over 200 pips? It was negative Brexit headlines and negative talks from and then negative talks from the Bank of England as well, right? I'm pretty sure those headlines like this was just a price grab and aggressive pullback during Asian session close, as these headlines are still fairly negative. I could probably see GJ dropping for New York session. There's no deal formed. All they're saying is really vague comments. Like, what the fuck does this even mean? What does this even mean? Right? It was just the Asian session close, because if you come to the trade room, we have the automatic reminders here. An Asian session close reminder, because usually you see some of these impulsive moves at the 4-hour candle close is sent 10 minutes ahead of that, right? Oh, gold, nice. Okay, so gold, this is the new 4-hour candle. We were talking about this potential setup as well here. If we can hold above 1897, this new 4-hour. But the one thing is, this 4-hour already created a significant top wick and came really close to 1902. It was only 15 pips off. And what we want to look at is that the US dollar, yes, and is in fact turning bullish again, right? So the US dollar failed to break below this support, and it's turning bullish with potential to go higher into 93.8. If the US dollar continues bullish and goes to around 93.8, gold will break below 1897 and come revisit these lows, and we're going to continue the gold sells. Remember, the gold buys we were looking for were just a pullback and correction of the overall impulsive sell side move to get better sell entry areas in the market and better risk versus reward, and then take those sells down. And the inverse correlation has been more prominent between gold and US dollar. Like when US dollar is bullish, gold has been more bearish. So if we can see the US dollar break above this, fill this wick and break up higher and go to 93.8, we have higher potential for the EURUSD sells, which we're looking like we're setting up, and the gold sells below 1897. All right. This was just a nice initial reaction to those previous price sensitivity areas and level, but if we break below 1897, I can see that potential squeeze down. I would have liked optimal sells at 1902. It would have been nice if that new 4-hour wicked a bit higher, 15 more pips to 1902 like we expected, but this was the 4-hour topic that was created at that open, and the US dollar is looking more bullish. And remember, we were looking for these pullbacks to play out. Like, we were expecting the GJ pullback, the deeper pullback, and we were expecting the gold pullback to play out anyways before New York to continue the overall trends, if you guys watched the start of the stream or been here since the start of the stream, right? So we were waiting for these pullbacks anyways to then continue down the current overall trend, which is showing us more potential gold sells, GJ sells, and EURUSD sells. But we're just looking for those pullbacks and then watching the reactions accordingly. This gold buy squeeze played out pretty well. We got like the 25 pips up on there. GJ, we were taking sells here at the retest of the structure, and we're up about 20 pips. But then of course Asian session close, and that 4-hour candle opened up and spiked right back above, breaking that entry area. So this candle would have taken you out either at break even, or if you had like a 5 pip stop. And then of course that next candle just did a huge price grab. But we were talking about potential 0.200 buys back to 0.500 now, because what we are getting on the lower time frame is a break of this bearish structure. Who was here when I was talking about the potential buys from 136.2 break and retest, right? So we did get that in the sense that we got the pullback to retest to start creating some bullish lower time frame structure. We got the break of the bearish structure, a massive breakout above 136.200, where the actual candle bodies closed around here, and then the retest of 0.200 and that lower time frame support made, where it looks like it's going to go back to 0.500 area. But even if you bought from 0.200, you could have got 10 to 15 pips. Right? Just be cautious with gold. I know it's holding the support for now, but it's heavily dependent on if the US dollar breaks higher. The Zoom sessions, I usually send polls to the chat just because Capital Hungry has members from across the world, so it wouldn't be fair to the paying members to only do a London session when a lot of them might be only able to trade New York. So I usually send a poll in the chat and let people vote, and then it usually goes 50-50 some ways, where 1 week we'll do a New York session, or a couple weeks we'll do a London session and go back to a New York, etc. But yeah, anyways, for gold, I'm heavily watching the US dollar, and if it breaks this bear structure and breaks higher for New York, because if the US dollar does this squeeze up to 93.8, Euro USD will go down to the key level around 1.685, which is an easy 45 pips. Gold back below 1897, sorry, 1497. We can take that down 70 pips to the 1890 candle body low. In USDCAD, I would only take buys above 1.316. It has been in a messier intraday range. GJ, I am watching reactions at 136.5 to see where the actual intraday candle bodies close, right? I am still, even if GJ, like we were talking about, if we zoom out here and we get rid of this lower time frame structure, even though GJ did this massive aggressive pullback here, right? It's still not breaking above this previous price sensitivity area or key level 136.5. And from the impulsive sell of 200 pips from around 135.8, this is about a 50% correction where we just spiked up to. Okay? We were expecting that 50% correction of the overall downside move for premium sells anyways. That was just extremely aggressive and extremely fast, and right at the end of the session, where Asian session was closing, you know? So GJ, just because it did this aggressive pullback, if the candle body closes as is, the 5 a.m. candle, and the following candle retests 136.5 and fails to break higher, GJ is still intraday bearish structure with potential to revisit these lows. Okay, we still have had this strong sellers impulsive move, break of intraday bearish structure, buyers failing to break previous intraday highs, etc., etc. Right? Sterling is just back to a neutral move, but still overall looking pretty bearish when we zoom out. Remember, when you look at the 1 minute chart, you can you don't like, you have to understand and know the time. I was already warning you guys about the Asian session close, how we can get a deeper pullback for it, but I just made the error that I wasn't even looking at GJ because I was answering the questions from the chat. Like I wasn't even paying attention that Asian session was closing at that time, right? But the whole idea of GJ doing a pullback, like we were looking for that 50% correction anyways. It was just way too impulsive and way too fast to execute on, and unless you had a sell limit, but didn't even go to 0.800 on the dot, right? So when you're looking at the 1 minute, what I meant to say is you have to still keep in mind your intraday candle timing. Are you coming towards a candle close on the hourly? Is there a 4 hour candle close? Are you coming towards a session overlap like or a session close? You know what I mean? And you have to know about these timings of the market because like I said, especially towards Asian close coming towards pre-New York, the potential for a deeper pullback makes sense. Obviously, we didn't expect that deep of a pullback to 136.8 in 30 seconds, but it was expected to get a deeper pullback to get better sell entry areas for North American investors during New York session to continue that overall trend down, right? And possibly revisit these lows. So it's really going to show us the buyers and sellers strength depending on how this hourly candle closes, and the next one if it rejects and remains below 136.500 as well, because that is not correcting the overall downside move. That is not breaking structure on an intraday perspective. That is doing exactly what was expected of a 50% correction of the impulsive sell side move from peak to bottom, which is around 100 pips. Okay. And those headlines, they might say that that was the reason for that impulsive move up, but honestly, I think it was more of a price grab and setup for pre-New York and that Asian session close, because those Brexit headlines didn't say shit about shit. They didn't say fucking anything. Like if you read them right here, they're the absolutely most mixed statements I've ever read. But I guess anything is will be taken as optimism, but still. Yeah, I'm just going to the washroom. What happened? You guys had questions? Oh, that's what it was after. No, I had to get food. I was starving. Bro, nothing like the coffee breaks. Who's the last streamer you seen talk for how long? 2 hours straight? 3 hours straight? About financial markets? Lucas getting banned from the chat. Yeah, I'm gonna end the stream in like the next 20 minutes because it's been going for about 2.5, 3 hours. Okay, dollar's continuing bullish. Looks like it might break above previous highs and head to 93.8 for New York session, which will support our gold sells. The structure. GJ on the Asian session close, the new 4-hour candle as well, did that aggressive pullback, but the candle body itself snapped back very fast, within 10 seconds, over 50 pips, and closed below 136.5 and also below this order block area to the left. And it went to like 0.800 on the dot, which was like a 50% correction point we were expecting anyways. Just was not expecting it that fast or aggressive. Mac in the chat. No problem, Sonny. A-Rod, no problem, guys. I'll be doing these once a week on the YouTube channel. Once or twice a week. But if you guys find these streams useful for yourself, like the fundamental and technical analysis, looking at price action, market structure, news headlines, economic events, and all that, just share it around. Just share around the YouTube channel, youtube.com/capitalhungry, on your social media to your other trader friends, you know. Just pass it along. You guys can watch this previous stream here as well. It got like 1.4k views, the first stream ever. That's not bad actually. Especially because I'm not on social media anymore. Like I don't have the social media clout. I just post straight information. The one thing you're not gonna get from me is that clickbait, is that Forex clickbait, right? This is all like 50-minute webinar on oil, 50-minute webinar on you are a debt slave. Who wants to watch a video where I call them a debt slave? Nobody probably wants to watch that, but it probably teach you more than any other Forex video. You know what I'm saying? It's realistic. But the shitty thing in our society is that the real does not prosper. People want fake shit. People want to live up to like fake personas, fake personalities. But the real always keep it real. We got the psychology webinars, breakdown webinars, fundamental webinars, greatest transfer of wealth, fundamental principles, gold example, oil, central bank, full timeline of GJ, breakdowns across these pairs, more psychology webinars, live trading streams, scalping webinars, gold. What time is it now? So yeah, 1 sec. Let me zoom out this quick. If we can get the hourly to close below these candle bodies in the next hour to retest 1897, that looks like a nice sell-off to 1890. Or another safer option would be at a break on the 1 minute below 1890, break and retest, and you can catch that 70 pips down to 1883 higher time frame key level and play the ranges down. But this heavily is dependent on if the US dollar continues its move up to retest previous intraday highs at 93.8, which it looks like it is. Wednesday, we just have the US. Is that this week? Yeah, it is. We just have the crude oil inventory report. Oh, sorry. We have the US producer price index report at 8:30, which can support further US dollar strength and nothing else as per economic data, but you guys can just check the weekly report in the main feed. What's the date today? 14th. A lot of Fed speakers, a lot of Federal Reserve and ECB speakers through the day today. A shit ton, actually. From 8 in the morning all the way up until late day. We have a lot of Federal Reserve and Central Bank, ECB speakers. Bank of England as well. So just be cautious of that. Germany's Merkel says on Brexit, the EU is united in its efforts to achieve a trade deal. So we got some more short-term optimism. They're trying to bring more optimism with Brexit right now. So that's given GJ a very mixed sentiment, because it's very bearish, and that was only a 50% correction, and we still did not have any significant breaks above like previous price sensitivity areas. But we are getting some more potential Brexit optimism with the Germany's leader talking about how the EU is united in its efforts to achieve a trade deal with Britain in the short time remaining, which means they're optimistic for a trade deal, which means if we can get a break and retest above 136.5, if you aren't already in at 136.2, there might be that deeper retest of 0.800 again on that optimism if we break above 0.500. Even this 0.200 break and retest buy, still a nice 20 pip squeeze. Once we had that break of the bearish structure, which I was highlighting earlier, and break above 0.200 psychological price level, that was still a good 20 pip squeeze as well. Wait, what was your question, Raul? You have a question about entering trades? Breakdown on GBPUSD. GBPUSD is going to look exactly like GBPJPY in the 1 minute and on the intraday. It's going to look exactly the same. You see that? Magic. Crazy, right? Do you know why? Because you have the primary and the quote is the exact same, and the secondary follows the class of a safe haven currency. Japanese yen, US dollar, and Swiss franc are safe haven currencies. So my thoughts on GJ at this time, as it's primarily dependent on the Brexit optimism or fear, is the same as GU to GJ, GU, the same idea. GBPCHF, probably the same thing on the 1 minute. Crazy, right? Because you're safe haven currencies. CHF, USD, JPY. No, I didn't take, I took the gold buy scalp, that's it, above 98 for the 25 pips. I didn't take anything on GJ because GJ was coming, when GJ was doing that sell, I was answering questions and it was coming towards Asian close. So when you have market fear, picking up, you see investor liquidity inflow increase into the safe haven currencies. So CHF goes up individually, US dollar goes up individually, and JPY goes up individually. These are your primary three safe haven currencies. And when the markets are very optimistic, you have the opposite. You have JPY, US dollar, and Swiss franc weaker. That is why I keep a chart out of looking at the US dollar and looking at JPY side by side, just the standalone, the index currency, the currency indexes, sorry. So looking at the Dixie and looking at the Japanese yen currency index, because it just shows you that actual standalone currency movement, and you can still observe the price action and see how sentiment is moving, right? So when we had the market fear pick up initially to start off New York session yesterday, when of course the US dollar was picking up strength, the yen was stronger, and Swiss franc, because at that time we had all these negative headlines regarding Brexit. We had negative headlines regarding the Euro-US trade war. We had negative headlines regarding Trump and US stimulus, the coronavirus stimulus that he keeps going back and forth on. All this market fear took investor liquidity and put it into these safe haven currencies. So you would primarily see pairs like the risk currencies, unless the individual risk currency is stronger for its own reason. Like, let's just say the risk currencies are AUD, GBP, Euro, NZD, CAD, right? Those are the main risk currencies I look at, or you see in the market, or you play with, right? So unless there's an individual reason for one of these individual countries' economies to be stronger, they will all follow the same suit if you have mass market fear or optimism. So let's just say, for example, CAD, that crude oil was extremely bullish because the Canadian dollar and crude oil share a positive correlation because Canada exports so much oil globally and brings in revenue for its economy that way. So if oil, just for that day, due to whatever supply or demand reasons, or let's just say it was crude oil inventory reporting and the inventory was low, so supply was lower and oil's going up, let's just say oil went up like $3 a barrel, that would also support buyers in CAD. That would also increase the value of CAD, right? So you can have fundamental impacting factors for these individual currencies, but mostly across the board, when you have mass market fear or optimism, for example, that New York session, EJ, EU, EURUSD, GJ, GU, GBPJPY, they're all going to look fairly similar as per the overall structure and movement, right? Like if you look at, if we just go to the 1 hour here on GBPJPY, the 4 hours a bit cleaner, you could see you had an impulsive sell-off and then this corrective phase, right? It's not the cleanest, but you get the idea. GBPUSD, similar idea, right? Impulsive sell-off, corrective phase. It's not exactly the same, but you get the idea. GBPJPY, obviously you guys already know, we were just looking at it, right? Euro JPY, impulsive sell-off, corrective. The euro pairs will look more similar to each other, like euro USD, for example, which we were already looking at. Impulsive sell-off, corrective. Euro CHF, way messier, but same idea with the sell-off and corrective action, but it's already selling to new lows. AUDJPY, impulsive, corrective. AUD USD. All right, you get the idea? It's because it's following that concept of risk currencies versus safe haven currencies, and that weakness or strength dependent on real market fundamentals of what's going on. So when you had all that market fear again from those negative headlines through yesterday in New York, or for a more macro example, when we had coronavirus first hit the markets, right? Months ago. The weekly. We saw this massive sell-off and then the correction after, but we saw this massive sell-off into the new year, right? And you will see that across the board. You know what I'm saying? That is market sentiment. That is investor behavior and smart money moving across the board based on overall market fear or optimism, dependent on those factors, right? Whether it's a pandemic, whether it's political talks, whether it's trade deals, it doesn't matter. Whether it's a real war, it does not matter to us what the actual catalyst is. We just have to understand, is it going to be absorbed by global investors as fear or optimism? That's how you can simplify it for yourself. Because at the end of the day, there was wars 10 years ago. There's going to be wars in the future. There was pandemics in the past. There were financial crashes in the past. History's been repeating itself because these economic cycles are meant to repeat to keep the 1% rich and constantly transfer wealth through generations. Okay, economic cycles are just the way it is. Like, the recession was bound to happen, regardless if it was because of coronavirus, or regardless if it was going to be some war in the Middle East, regardless if it was going to be some financial collapse again, dependent on banks not having anyone to give the loans out to, and have another financial collapse based on either mortgages, which would be a lot more difficult this time, or it could be the automotive loan industry this time, or it could be the credit industry. It doesn't matter. There's always going to be some catalyst that's going to bring either fear or optimism, and if you can learn to read that alongside the technical analysis, it's a very, very, very useful tool, right? But yeah, see what we got going on in these pairs before I sign off here, as we're coming to pre-New York. Gold is just hovering around the key level right now. So not the cleanest confirms to start selling. We need that clean break below 97, and it would look like we possibly get that for New York. Heavily dependent on the US dollar, which is rejecting right now at the exact same highs. That's not the best sign right here, that we're pretty much started rejecting at the exact same high point and might close back below bearish structure. Because that US dollar sentiment and inverse correlation on gold is a strong tool as well when it is active. Of course, when coronavirus was first coming out and shut down global economies, that was a different story, because you were impacting gold individually and shutting down gold production mines around the world, so the supply was limited. So you had all your safe haven currencies stronger due to overall market fear, like the US dollar at the time, the Japanese yen at the time, and gold was also bullish because that impact on the supply and demand of gold. And that's why oil went negative, right? Because there was such little demand for oil, because you had economies stagnant and you had countries just so heavily overstored. They had such high storage of oil. So you had massive supply and little demand, and then you had a massive meltdown in price. It looks like gold still might give that squeeze up to 1902 for the following hour, then drop for New York. But those optimistic headlines for Brexit, especially that most recent one, might give that squeeze up as well. But yeah. What time is it? This has been running for a minute. All right, everybody. Thanks for tuning in. If you like this stream, if you enjoyed the information, give it a like, subscribe. Make sure to watch it all, like Max said, all the YouTube videos on the channel. You can check out the Twitter, the free YouTube, the free Telegram analysis chat, capitalhungry.com for more. And then I'll do the stream next week as well. We'll do it once a week or twice a week. And then private chat, we'll do a casual Zoom session tonight where I'll just send us a Zoom link and we'll be looking for setups. Same idea.